morning, ladies and gentlemen, and a very warm welcome to each and every one of you. My name is Delane Morgan, and I am the manager for the Exporter Facilitation Department at JAMPRO, and I will be serving as your host and moderator for today's event. Today's session is the second in JAMPRO's series of Exporters Information Session, and it's being hosted in partnership with the Development Bank of Jamaica, DBJ, under the theme, Financing Options for Exporters. Whether you are a new exporter or an aspiring exporter or an experienced player looking to grow your export business, this session is designed for you. Just to get a sense of who we have in the room, I'm going to ask by a quick show of hands, how many of you are exporters or have exported before? Okay, great. And how many of you are aspiring exporters actively working towards entering the export market? Can I see by? Okay, good. So we have a wide cross-section of participants in the room, and it is our hope that today's session will equip you with some practical financial tools and insights into both traditional and non-traditional financing, as well as international funding options to support your export goals. So, to officially commence today's proceedings, I now invite to the podium JAMPRO's Vice President for Export, Ms. Sonia Linton, to do the official welcome and opening remarks. Please help me to welcome Ms. Linton.
Thank you, Delane, and good morning, everyone. It is my pleasure to welcome you this morning to this morning's Exporters Information Session under the theme, Financing Options for Exporters. On behalf of JAMPRO, I extend a warm welcome to all our participants. And I'm happy to see that we have some seasoned exporters and some aspiring exporters in the room. I'd also like to welcome our valued stakeholders from the financial ecosystem. This morning's session is part of JAMPRO's ongoing efforts to support export growth by tackling a challenge faced by many Jamaican businesses, which is the access to financing. Whether you're entering the export market for the first time, looking to upgrade production capacity, or targeting expansion into new regions, the ability to secure appropriate and flexible financing is crucial to your success. Today's session is hosted in collaboration with the Development Bank of Jamaica and supported by a strong lineup of presenters representing key institutions across the financial sector. Allow me to specially acknowledge and thank our speakers who have committed their time and expertise to today's session. Mrs. Lisa Bell, a financial expert, who will guide our panel discussion later. Mr. Travel Mullings from the Development Bank of Jamaica, who will present capital solutions to take your businesses from startup to scale. Mr. Hopton Nicholson from the Exim Bank of Jamaica, offering insights on specialized export financing tools. Ms. Terra Sigri, representing the Inter-American Development Bank, will highlight opportunities for accessing international financing. We'll also have representatives from our traditional banks, Ms. Pamela Douglas from Scotiabank, Mr. Ramon Richards from First Global, and Ms. Kimberly Martin from the National Commercial Bank, who will speak on practical financial products that their respective institutions are now offering. To our panelists, who will dive into alternative financing options, Mr. Rajiv Ebanks from Carbine Capital Investments, Ms. Gabrielle Spence from Barita Investment, and Mr. Andre Gooden from the Jamaica Stock Exchange. We thank you all for being here and for your continued collaboration in helping to create a more supportive and responsive financing environment for our exporters. Exporters, as you engage with our presenters today, I encourage you to ask questions, explore the offerings from each institution, and consider how these tools, both existing and emerging, can support the growth and sustainability of your export business. I also encourage you to visit the information sections. There are representatives all around the room from the various financial institutions. They will be available after the formal proceedings to ask whatever questions you have that are specific to your business. Please do not leave here without having those questions answered and perhaps making appointments to have further discussions for your businesses. So let us continue to work together to unlock financing, unlock opportunities, and unlock your, and by extension, Jamaica's full export potential. Thank you, ladies and gentlemen, and do have a productive session.
Thank you, VP Linton, for those timely remarks and for reaffirming JAMPRO's continued support for our exporters. So, ladies and gentlemen, we are really excited about today's session, and we urge you to fully participate in the discussions. And before I introduce our first speaker, who will set the tone for the presentations to come, I would just like to run through a few housekeeping matters. We kindly ask that you place your phones on the off position or on mute. Each presentation will include a question and answer segment, so please make a note of your questions and hold them until at the end of the presentation. The restrooms are located just outside of this room to the right as you exit at the back. At the end of the session, refreshments will be served, and I encourage you to take that opportunity to network and to visit the information desks set up in this room by our various financing partners. So, to set the stage for our discussions today, we will begin with an overview of the key financial challenges that impact exporters. And it is my pleasure at this time to introduce our first speaker for today, Mrs. Lisa Bell, who is an accomplished financial consultant and a former managing director of the Exim Bank, bringing over 2 decades of expertise in export development, credit analysis, and public sector leadership. Please join me in welcoming Mrs. Lisa Bell as she shares her insights. Over to you, Lisa.
I don't know who she's talking about, but anyway, good morning, everyone. You know, finance is not a very sexy subject, so I need to keep you awake. This is like a homecoming for me. Been 10 years at JAMPRO and then 12 years at Exim, combining my export expertise and my financing expertise. I am so excited to see so many people in the room. And I think before I even start, I want to do a further polling. How many people are in manufacturing? How many people are in agro-processing? How many people are making specially branded products? And how many people are in the service sector? All right, great. So we span all the major sectors in the economy. I'm so happy to see so many female-owned businesses in the room. You know, hands up for the female-owned businesses in the room. All right, so I'm going to get into the presentation. And this presentation is probably stuff that you all know already because you are experiencing the challenges. But to give an overview. So let's begin. All right. In terms of a profile of exporters, as you know, most exporters are small, family-run, and some are very informal. There's a significant portion of exporters who are in primary or semi-processed goods, as you said. Value-added manufacturing and branded Jamaican goods are still emerging sectors with huge potential. Would you agree? Brand Jamaica is very strong. Exporters often struggle to access pre-shipment and working capital, trade credit insurance. How many people who know what trade credit insurance is? Exim. Foreign currency and foreign currencies lines of credit which are needed to facilitate imports of raw materials. Many experience high costs, things like energy, imported raw materials, and small-scale operations that don't allow them to achieve economies of scale. Insufficient international promotion, which really weakens your global market integration. If you are not on the internet, you do not exist. They also face struggles in attaining international certification, which is required in many markets, as well as various standards that are specific to specific global markets. And of course, they're excluded from traditional finance channels. And I mean, this is reinforced because the BOJ and the Jamaican government have been studying this issue for a long time. And I'm sure you know, well, maybe you don't know the statistics, but as of 2023, which is the latest statistics I could find, only 22.8% of Jamaican adults are unbanked or underbanked. Digital transactions, even though we've introduced JAMDEX, are still, they're rising but still low. Only 45.7% of merchants accept digital payments. That's not going to work in the market going forward. And MSME lending, which is a big problem here, is less than 6% of GDP. BOJ has simplified KYC, which is Know Your Customer requirements. Those are the requirements you need to meet in order to borrow. And launched the National Financial Inclusion Strategy under 4 pillars. How many people even know that? There we go again. All right, so that's why this session is so timely, because it is going to help you to understand what is there and what you know and what you don't know. So why does export finance matter? And this is an obvious question. Because you need, well, first of all, exporting firms drive growth. The minister has said this over and over and over again. And we have huge potential despite our size because of our strong brand. In terms of they drive innovation, small businesses and medium-sized businesses drive innovation and they drive foreign exchange earnings. That's why they're important for the economy. In addition, only 13% of MSCs in the Caribbean export. Can you imagine that? And I don't think this includes tourism, but really is really low in the context of what is, but it also tells us where the potential lies. And of course, access to finance is the #1 barrier to export readiness. But let's find out what is happening in the traditional sector. And when I say the traditional sector, I'm talking about your friendly commercial bank. And I don't know how friendly they are sometimes, and I can say that now, right? They're not always friendly. I mean, during my years at Exim Bank, my clients, some of you who are in the room, would complain that their commercial banker has never visited their factory, ever. Right? So there is a lack of knowledge. But some of the issues facing the commercial banking sector is that interest rates are still too high. Would you agree? Yes. You don't have the collateral. There's insufficient collateral. Most banks require real estate assets, which excludes many SMEs, particularly if you're in the in the services sector. As I said, those operating in the services sector rely on movable assets, which are less acceptable to your traditional bank. Owners are sometimes unable or unwilling to pledge their personal assets. So many of us have been asked to say, well, can you pledge your house? Right? And you don't want to get your personal assets mixed up in your business, necessarily. Some have limited credit history, and these are the things that the bank wants. And that's why I'm speaking from that angle. Many exporters may not have established credit history or lack a track record with their lenders, right? You may have a current account and that's it. Many SMEs keep informal or incomplete financial records. And you should know that if you go into a bank, they want the audited financials, they want your cash flow, they want all of it before they even consider you for lending. Audited financial statements are often expensive, if you can get them on time, and are not consistently maintained. And those are requirements for a bank. Also, from the bank's perspective, when you lend to an SME, it's considered high risk. Why? Not because you don't pay back, but also because many SMEs are really focused on one or a couple of products, and there's a lack of diversification to mitigate any risk from the downturn in that product. So there's a dependence on few clients and few products. That spells risk to a bank. Also, they have limited business longevity or track record. How many people in here have been in business more than 5 years? Okay. So the bank will look at that and say, this is a startup. They've only been in business. They haven't weathered any storms yet. All right. Let me go on. Oops. Having a little problem here. Not changing screen, guys. All right, I'm gonna go on while I figure it out. Yep. Try now. All right, you change it from there. No? All right, I'm gonna go on while I figure it out. All right, other things that face from the bank's perspective is there are often high transaction costs associated with lending to SMEs. You know, when you make one big loan, it's one client you have to deal with. If you lend the equivalent amount to 10 SMEs, it's more administration. So that's how the bank thinks about it. There's also sometimes inadequate business planning on the part of the SME. They're poorly prepared and have unrealistic business plans. Many SMEs cannot clearly articulate their financial needs, what their business model is, or repayment potential. And I'm going to pause on that one because in my post-public sector life, as I am a management consultant, the number one, I have clients call me all the time because they're even afraid to approach the bank. They don't understand the terminology. They don't understand the 10 million documents that the bank is asking for, and they're just afraid to navigate the process. And there is a clear need for intermediation in that respect, just to help do some hand-holding to get you through the process. And back up. All right. Also, difficulties in navigating the loan application process, and I think that's what I was referring to before. Oftentimes, the bank requires significant documentation requirements. They almost want your blood, right? And I'm a banker, so I know what we wanted. They want to know your personal financial statement. They want to know how long you've been in business, what are your real estate assets, they're doing a credit report. So it seems overwhelming to a SME, but really it is needed in order for the bank to assess the loan. They sometimes lack technical knowledge, and that's what I refer to. How many know what a moratorium is? Yeah, some do. A moratorium is when they suspend the payment of principal and only collect interest for a period of time while you are building out, right? So people, if you don't understand that term, when the banker says, okay, we'll give you a moratorium, you're like, what is that? And of course, sometimes the banks are considered unfriendly. And this is what I'm hearing from the SMEs. Also, there's a sector bias sometimes and a lack of knowledge on the part of banks. As I said, sometimes the bankers that you're dealing with have no clue what you're doing with the business, right? They don't understand your challenges and they cannot formulate loan products that align to your needs. And I'm certain if they haven't even visited your factory, they can't understand what you're doing, right? And unfortunately, there's a need on that side also on the SME side, but also on the banker's side, to have broader and deeper understanding of the businesses that they lend to. Banking officers are unfamiliar with industry norms, particularly in niche sectors. So if you're coming with something completely new and innovative, they're going to spin their heads, right? And we need, particularly in the technology sector, and I've seen huge opportunities in the technology sector, but the bankers need to understand it. Oh no, I have 1 minute, let me hurry up. There's a lack of tailored financial products that meet business needs. And of course, I'm sure some of the women in here would say to me that there is a gender bias at times, or a geographic bias. You know, if you're operating in Clarendon, we don't know nothing about Clarendon, right? So those are the problems, and I'm sure you'll agree with me that covers most of the problems you face. I know the rest of the session is going to deal with the solutions, but just to mention some of them. There are some alternative trade financing solutions, factoring, which is recently, I think you're going to hear from Carbine Capital, who's doing that. Selling your receivables so you can get the cash, right? And when I say sell receivables, somebody owe you money, and therefore you're going to give it to the bank, they're going to collect the money, and the bank gives you the money. Receivables financing, very similar. Purchase order financing, based on your purchase orders. They're advancing money on fulfilling your orders. Export credit insurance. Geez, I really need to talk about trade credit insurance, but I know my colleague from Exim is going to cover it, but it is a huge product and very needed for exporters. Buyer financing. Sometimes the buyer provides you with financing, and that is helpful. And of course, fintech platforms, which are evolving now to make the loan process easier. Other solutions that exist, as I said, export credit insurance, which allows you to mitigate the risk of a non-payment by a buyer. Credit guarantees are simply that somebody's going to offer a guarantee in case you don't pay the loan. And I'm trying to make it simple. And there are some innovations that are coming up. More tailored products based on your specific sector need to be developed. Would you agree? Digitized onboarding, so you can sit in Clarendon and send the application in, right? And credit scoring systems to make it easier. Also, the junior stock market is a fabulous evolution, but how many people know how to navigate it, to access the capital? Many small businesses are focusing on their own family financing. Debt and equity is not a bad thing, as long as you maintain control. And of course, JAMDEX, and I'm sure JAMDEX has huge potential because in essence, it's a digital wallet. And I speak quickly about JAMDEX. Digital transactions globally are going up significantly. JAMDEX is our digital solution. Fintech tools mean tools that are driven by technology, offer quicker processing, and that is something that we need to evolve into. And of course, the challenges are low awareness. JAMPRO needs to do more sessions on tech access and helping you understand to navigate. So I applaud them for doing this, I actually do. So what are the policy recommendations? 1, expand financial literacy. Based on the number of people in this room, we need to do it again and again and again, so you understand what needs to happen. Promote digital finance and JAMDEX integration. Further incentivize MSE equity listings, get you all on the junior stock exchange, and how to access private capital. Because anybody who believes that there isn't money in this economy is not real. There is money in this economy, you just have to know how to access it. And of course, I cannot help but say this, but all the export financing institutions, including Exim, need to be strengthened so that they can respond to your needs. And lastly, and I know I went very fast, but I'm hoping I will have a time to talk to you, is my own conclusion, based on my years and years of experience with this sector and in finance, is that we need to recognize if we don't address these issues, we're actually stifling the export potential of the country. 2, the solutions that we craft must address the structural issues as well as the behavioral issues. We need to understand what the awareness issues are in the MSME export sector and address them frankly and in a way that you all can understand. Collaboration is needed between the private sector, the public sector, fintech, and the regional banks. Whether it's Caribbean Development Bank, whether it's Exim, whether it's DBJ, whether it's private capital, we need to be working together to find holistic solutions that meet your needs. And of course, I couldn't help but say support for inclusion for women-led and informal exporters. We need to recognize that it's a growing sector and it needs specific attention. Women CEOs, yeah, I was one, operate a little bit different from males, and no disrespect to the males in the room. But many of our businesses are being manned by women, and we need to understand the needs of their business in that context. So that's what I have for you today. And I'm hoping that, that coming out of this session that you will get the information you need, and certainly from where I sit now I won't say I'm retired, I am in semi-retirement. I don't look old enough to be retired, right? But I am still very passionate about helping exporters and small businesses navigate their financial needs and being able to walk confidently into a bank or an institution and get the lending that they need to grow. All right, thank you very much.
Thank you, Lisa, for that excellent context and overview. So we are now at Module 1 on the agenda, which is going to be looking at development financing. And we will move to the first presentation in that module, which focuses on capital solutions from startup to scale. And this will be delivered by Mr. Travell Mullings, Acting Manager, Intermediary Relationships at the Development Bank of Jamaica. And just by way of introduction, Mr. Mullings, in his current position at the DBJ, plays a pivotal role in advancing the bank's strategic initiatives across the financial sector. And he is an expert in the development and execution of programs aimed at empowering micro, small, and medium-sized enterprises. Please help me to welcome Mr. Mullings.
Thank you very much, Delane. Good morning, everyone. Good morning, everyone. All right, maybe we need to do lunch a little early, Delane. I'm not sure, but I trust that at the end of this session that we'll be able to, move forward with exports in our Jamaican economy. So it's good to be here. Let me just thank you so much. The DBJ is excited to be a part of initiatives like these. Part of our mandate is to ensure that we see economic growth and job creation in Jamaica. Part of our vision is to ensure that we are the leading institution that drives economic growth and job creation in Jamaica. So there are three core things that we operate through, and those would include loans, grants, and I hear Ms. Bell mention credit guarantees. And so we're going to be looking at some of those initiatives. And just to point out, in follow-up to Lisa's presentation, that there are three core areas that really deals with access to finance. The first area would have been the availability of capital. The second area would be the affordability of capital. And then the third area would be accessibility, which really deals with the eligibility. So capital would be available at the right price, but there are times when exporters, manufacturers, persons in agro-processing just can't access it because they are not eligible. And so the DBJ is here to offer solutions that will drive eligibility and access to capital. Now, it's important for us to mention the definition of MSMEs. And no, some of you might say that this is outdated, and I'm sure that we will be doing reviews as we go along. That MSMEs are defined as those entities that earn below $425 million annually. So if your revenue falls below that, then you are regarded as a MSME. And anything over that is regarded as a large entity. And so for DBJ's products and services, we are able to support you along several lines. So in terms of agriculture, agro-processing, these are the sectors that we really like, that the productive sectors that will actually drive growth in Jamaica. Manufacturing, information, technology, retail distribution, mining and quarrying, and so on. So for us, I believe most of us in the room would be like in agriculture, agro-processing, and manufacturing. So you can say that DBJ is for you, all right? And so the loan for our loan products, the purposes can be used to establish crops and livestock, for the construction and the expansion of your operations, for machinery and equipment, which is pivotal to the productivity of the country and productivity within your own spaces that will drive that sort of a production that will, allow you to actually meet the demands on the export market. A key to that as well is energy savings projects. For those who are in manufacturing and perhaps just about any business that operates a brick and mortar would appreciate the fact that high energy cost is a key factor to you actually becoming successful. And so what we want to be able to do is to present initiatives, present products that will allow you to lower that cost so that you can actually have a better bottom line and serve the people who you are opting to serve. Now, I want to share with you, I'm not sure why it got a little jumbled, maybe in the transfer of the document, but for DBJ, our loan products that we currently have can go up to $1.5 billion per beneficiary. So depending on what you're doing, depending on how far you're going and what you can actually afford, the DBJ is saying that we will support you to the tune of $1.5 billion across key sectors, which include agriculture, agro-processing, and manufacturing. Now, in terms of moratorium, I hear that been mentioned by Lisa earlier, and that is a key solution to you actually accessing the credit. Some of you may need moratorium to actually realize the payments to come in so that you can actually service your debt. DBJ is saying that for a 10-year facility, we can offer you up to 24 months or 2 years moratorium on the principal. That's a pause on the principal payment in order for you to be able to realize the transaction. Now, in terms of that moratorium, it's important to understand that some of you might need a moratorium at the beginning, but sometimes during the process, a burial might come. And you might find yourself, being thrown off a little bit with your production and, pretty much how you are able to supply to those persons. And so we are saying that the moratorium does not necessarily have to come, or all of it can come at the beginning of the loan, but during the process where there are challenges and there are difficulties that are justified, we are able to offer that solution, that as a solution to your funding needs. For entities that are micro, small, and medium-sized enterprises, we are offering up to 90% financing on your project, and for those who are large enterprises, up to 70%. Notwithstanding, if you have a compelling case, we are saying, speak to us about it, let us discuss it in detail, and we'll be able to see how best we can offer a solution. Now, the approach that DBJ is taking, and particularly recently, is that it's not a straitjacket approach, but it's that we want to be able to look at your project in detail and not just throw a loan at you, but to offer a solution, which may be a blended approach, which may be a mix of other capital solutions that can actually drive growth and allow you to access the capital needed for you to be able to serve the areas that you intend to do so. Now, when we speak about eligibility, one of the key factors to eligibility is collateral. And many persons within their operations, they might have just a motor vehicle or a machinery that is specialized. And like Lisa said, some of the banks will say that, for specialized equipment, we cannot take, in terms of the loan to value, we cannot take more than about 60% or 70%. Then you're asked to find up to 30% other form of collateral support to back that facility. Now, the credit enhancement facility is key to the eligibility criteria, because you would have had access to the capital would be at the right price, but now you have a barrier in terms of collateral support. And this particular facility will allow you to access up to $30 million in collateral support to back your loan. In simple terms, you go to the bank, you are approved for the facility. The bank says, okay, we need your collateral. When you check what you have, the collateral is not sufficient, then DBJ can come in at that particular point in time and provide collateral support to the tune of $30 million per entity. It's important to understand that we can cover up to 90% of that to the tune of 11.11 million. So that will be $10 million in coverage for 90%. After that, then we can do 80% coverage. There is a cost to it. Let me not be trying to hide information. There's a cost to the credit enhancement facility, which is 2% on the plus GCT on the reducing cost. And it's also important to note that whether it is a DBJ funded loan or it's a non-DBJ funded loan, the credit enhancement facility can be used to support either of them. And the facility does not outlive the tenure of the loan. I might not have mentioned this in the previous slide, but let me also mention it, that even though we see a tenure of 10 years, there are times when a tenure of 15 or a tenure of 12 would be best suit for the, based on your needs and who you are serving and the amount of capital that you require. We are saying that even though it's 12, still speak to us. We have moved away from just plain old banking to relationship banking. Let's talk about your project and let's see how best we can find a solution to that particular need. In terms of alternative financing solutions, I know that we'll get along that line in another presentation following, but the DBJ would have pump funding into private equity solutions. And so we would have supported about 10 different funds to the tune of $21 million US so far, which would have supported over 100 businesses in that solution. Now we're saying that it's not something that you come directly to DBJ and get. These private equity options would be managed by a fund manager, and of course the DBJ is able to provide information on how you can access alternative financing solutions. Another barrier to access to capital is sometimes the upfront cost as it relates to accessing credit. And I'm sure that when you go to the bank for $10 million to purchase a piece of equipment, and the bank says, okay, you need to find $1 million upfront, it's like you scratch your head and turn back. The DBJ would have, in the past couple of months, launched a product called a loan fee financing program, where if it is that you are required to provide the commitment fees or credit enhancement facility fees and other upfront costs related to the loan, we are able to tag that onto the principal amount so that you can access the capital. So we have credit enhancement, which is collateral support. We have removed the barriers in terms of upfront costs related to accessing credit. So we are actually on our way to releasing the capital that persons need. We have another product that we want to just share with you that you can also take note of, and that is the enhanced energy audit program. This is where, especially for our manufacturers, that, when you see the light bill coming in at a month time, it's like, $5 and $6 million, and you're wondering what you did to get that. So the Enhanced Energy Audit Program is whereas we provide an upfront $200,000 for a certified energy auditor to come into your establishment to actually look at what you're doing and see how best you can become more energy efficient. Now, we are saying that if you take a DBJ-funded facility, at the end of that audit, to implement that program, we're able to give you an additional rebate of up to $300,000 as an incentive to actually use this program and implement the energy efficiency program in a responsible way. So those are the solutions that we have to share for today. Access to capital up to $1.5 billion, the CEF Credit Enhancement Facility, which is collateral support, the loan fee financing that relieve you of the upfront cost to access to capital, and information on the fact that DBJ supports private equity firms, 10 of them, to the tune of $21 million. Those are my few words for this morning. I trust that I stayed within the time limit. And should I field questions now? Okay, so I am open for a few questions. So I can give you a response.
Are there any questions of Travel? Just to let you know that we have a mic. We have a standing mic on my right, your left. So if you have any questions, I'm going to just ask you to just form a queue at the mic. And I'm going to ask you to introduce yourself by stating your name, the name of your organization, and the sector you represent. Any questions?
There was one.
All right. Is there? Okay. Please go ahead.
Hi, morning everyone. My name is Kimara Gentles. I am in manufacturing. My company is Indulge Your Taste Buds, where we offer egg-free, low sugar, and also dairy-free option treats. So for persons who are health conscious or wellness, or if you have any dietary needs, we're the boutique pastry for you. All right, so the question I would like to pose, right? You mentioned about the loans and the offerings. I am a home-based bakery at this point. So I'm literally utilizing my kitchen to the best of its ability to turn over whatever experience I have, right? Will I be able to try and even meet any of those needs being a home-based manufacturer?
Certainly. Thanks for that question. It's one of the things that I want to share with us is that relationship banking is critical in how we will actually provide support. So guess what? Your home base should be able to move from home base to actually going into your own manufacturing, and that's what DBJ is about. We are about supporting businesses that are scalable, and in that we mean persons that can actually grow and go into export and actually employ more people. So we are for you. So that's the first thing I want to say. The second thing I want to say is that in terms of access to capital, I know that there are some core requirements, and most of them is to be able to prove your ability to repay, and that is going to be paramount in actually accessing the capital. So we want to ensure that at the very beginning that you have a business bank account, you're running your funds through your business bank account, you're able to prove that you're actually getting your stuff in and you're putting them out, and you're able to produce a financial statement at the end of a year, at the end of 2 years. So that's critical to how you will actually be able to access the capital. Okay. Now, it doesn't matter if you're in your home or in your separate office, the CEF can be used to support you. The loan financing can be used to support you as well. All right, so we offer the support in terms of even the loan fee financing can be used to support a business like yours.
Okay, thank
so
you
definitely,
so much.
yes.
Thank you so much. Thank you.
Hi, good afternoon. My name is Aishika Dempster and I own Shiki's Castor Oil. Very nervous, my first time doing this. So I'm in the castor oil making business, right? The cold press one. So I ordered a machine from China, a very small one. It's doing its best right now, but I'd love to get a bigger one. The thing is that my mom and my grandmother my mom used to do the picking, my grandmother does the boiling, but both of them are dead now. So everything is rest on me to continue. No, I don't own a vehicle, and it's very hard for me because I go on the roadside and I pick oil nuts, and I just got a piece of land to lease in Colbeck in Old Darbar. I do eyelash extension, so sometimes I have to not take any appointments to go over to Colbeck to carry men to help me because it's not so populated and I don't want to go there by myself. So I'm asking if I get a loan, could this go towards a vehicle to help because I really need a help right now of getting a vehicle to carry my stuff back and forth, and it's very hard to take a bus to Spanish Town and to go take a bus to Old Darbar, then to go and get a taxi. So I have to rely on a gentleman over there to carry me because it's just me alone and I don't want to be in the bush by myself. Like, how can I get some help from your facility, please?
You know, and I really do appreciate the candidness with which you're sharing your story. And that is a story that we, the DBJ, would love to tell at the end of your 5 years after repaying your loan. I'm, I'm hearing two quick things there that we really love to support. I hear you saying that you wanted a bigger machinery, which means that you have intentions to scale, and that is something that we really want to support. You also mentioned motor vehicle, which would drive productivity because your productive hours are being spent traversing through other means. That is something that DBJ funded facilities can be used to support it. In fact, bankers that are in here that we would have partnered with have done several of those. So we are the solution is here for you.
Thank you.
All right, there's one more. I just take this one, right, Deline? Yes. All right, and our booth is at the back. Janelle and I are down there to, respond to any queries you have. Go ahead.
Good morning. I'm Rohan Brown. Jamaica Recycles is a company. We mainly export. My question to you is, from a financing standpoint, if I am required, say I need $20 million, but my accounting records are not up to date. Is there a limit to what I can access from DBJ? I get the impression that depending on how up to date your accounting records are, that it might limit you in terms of what you can access.
Okay, so just to note that the vast majority of DBJ facilities are conducted through a process called on-lending. In other words, we would have lent to the commercial institutions who would then lend to you.
All right.
Right? All right, let me just finish this one. All right. All right. So we would have that's the current process for most of our facilities are done through. So pretty much that's why relationship banking is important, because we would have seen where, because of relationship banking, you might not have this year's financials, but you have in-house financials or just management accounts, and they're able to look at that and assess you accordingly and provide support where necessary. We have seen that we have supported startups. In fact, we have supported one recently, very novel. We are able to support you with cash flows once the commercial banks are able to provide that particular support. So, and I'd say, I would say that I would say, and I respond to that. I would say that's the current process, and we can walk you through it. Now, the process that we would have undertaken maybe about 2 years ago, or if not 2, maybe 2.5, is that we would have done engagement between yourself and the banks through what is called an introduction. And we monitor that on a daily basis. And you'd see that in some of our financial partners that are here now, a lot of the facilities that we would have gotten were done pretty much through that kind of phase. So where you come to us and you say, okay, I need the $20 million. And we look at you and we ask you, what's your preferred financial institutions? We know Raman. We have him on our speed dial from First Global. We know the people from Mayberry. We know the people from the various institutions. And we conduct introductory sessions. And where there are challenges and issues, we work through them together. And so in that case, we're able to see loan uptakes rise. And so I know that you all have independent challenges. We are open to discussing them individually and see how best we can find a solution to it. But currently, the process is through on lending, and we have been maintaining relationships with banks and the MSMEs to ensure that they can access the capital.
Yeah, just a quick question. What's your relationship with Exim Bank? Is it that they are also part of the on-lending system, banking system? What's the relationship between DBJ and Exim?
So currently there are special arrangements that we would have had with Exim. Particularly recently, we would have a special arrangement with Exim as it relates to even the tools program. So there are times when in certain facilities that comes out, we'll be able to partner with special institutions to get that funding out to the MSMEs. So all the partners here are our partners. We support them, and funding can be accessed. If there's a particular situation, you can feel free to reach out to us. We'll be able to channel you accordingly.
I just want to follow up on the first question, though. I'm still getting the impression that maybe we would want DBJ to be a bit more
direct,
strident in terms of establishing that link to say, listen, how can we be more flexible here and there? Other than that, we are still going to meet upon a brick wall at the financial institutions.
Yeah,
and I think that is the main challenge that most of us are having.
And we do appreciate and receive those comments. Don't feel free to come to the booth and lay those out. In fact, recently, in a particular product review that we have had, which I am a part of, we have looked at ways in which we can carve out special funding as it relates to how we would deploy that in a very innovative way. So we are open to looking at how we can apply innovation in the deployment strategy. So we receive your comments, and definitely we take them seriously, and we look at ways in which we can adjust to make it viable for you.
Chevel, before you go, maybe you need to speak to the Big E program, because his issue was with the audited financials, and many of the companies have problems with getting the technical expertise to meet the requirements. So maybe you can speak to where DBJ provides assistance in helping the banks helping the companies to get ready to go to the bank.
Okay, great stuff. All right, so currently there's a program which many persons that is under further review, called the Gemini, all right? So initially you would be aware of a program called Voucher, right? Some of you would be familiar with that. You get a $300,000 voucher, you go get your financials, and then you go back to the bank. Now that program has been scaled up to ensure that it includes not just a financial statement or a business plan, but there are other products wrapped around it so that the financial statement, the strategic plan actually means something. With that, persons are able to pay up to $200,000 DBJ, back it with $800,000 value in service. That would be done through the JBDC. Now, with trying to accelerate access to capital in the near future, when I say near future, I mean in the next couple of weeks, you see how best we will loosen up that product a little bit more so that persons can, deliberately go in to get specific services, come out and be able to access the capital. So I'd say that the feedback that you give is very important, and all of these adjustments that we are doing and navigating the space is as a result of stakeholder intervention programs that we have actually done.
My name is John Bullock, and J. Bullock and Sons Limited, and we produce spirits, rum punch, among other things. My question to you is, can you explain to the audience how DBJ arrives at the interest rate that the banks charge, and how is that money worked out? How much does DBJ get out of it, and how much do you allow the banks to get from the funding?
That's a very good question. Very interesting question. I'm afraid I might not be able to answer you in in detail. But what I can say to you, based on the access to capital and maybe particularly our funding sources, I can say definitively that the rates that comes to you are not exorbitantly marked up from where I sit, right? But in a particular issue that you're having, from where I sit, in a particular issue you're having, we're open to dealing with them on a case-by-case basis and look at how we can assist in addressing your particular needs, all right? Thank you so much.
Thank you, Travell, for your presentation. Let's give Travell another round of applause for his presentation and really highlighting DBJ's role in providing access to finance to the export sector and wider business community. So we're going to move to our next presentation, where we will turn our attention to specialized export financing facilities offered by the Exim Bank. And Exim has long been a pillar of support for our exporters. And to walk us through Exim's tailored solutions for exporters is Mr. Hopton Nicholson, Manager of Loan Originations, and he has over 25 years experience in the banking sector and has been a member of the Exim team since July 2022. Mr. Nicholson, over to you. Please help me to welcome Mr. Nicholson.
Good morning. Thank you, Delane. As my previous presenters, I want to say, guys, job well done. Mrs. Bell, it's always awesome to be in the same room with you. So Exim Bank, as we all know, is a government-owned organization. Our goal is really to assist with the growth and development of small businesses, especially in the productive sector, through affordable financing options. Our focus today is more on our exporters, our manufacturers, or anybody that is linked within that sector that needs some level of financing. We consistently support the small and medium-sized enterprises through our short-term working capital support facilities, as well as our medium-term installment facilities. But importantly, it is to note that we offer trade credit insurance, which is pretty much a facility that protects your receivables when they leave the shores of Jamaica and end up in another jurisdiction. So the question is asked, when Delane asks, can you do a presentation to the exporters that will be in the room? there are a lot of questions that came to my mind. What do I do? Sit and have an interactive session where I can ask you what are some of the issues that you're having, or I can kind of think about a few of them for myself. So when I looked at it, and we have exporters in our portfolio now, when I look at it and I realize that you need some form of capital for your operations, not just for your daily operations, but for tangible assets to improve your productivity. There's also, we know that many times you offer credit to your buyers, so we know that you may have a cash restraint and your working capital is kind of tied up. So we look at how can we look at the cycle and how we can assist, right? The world is changing, technology is changing. We're into AI so much now, but one thing remains the same is that humans, the human element will never go away. But with all of that said, you need to modernize the equipment. You need to build capacity so you can improve your productivity, you can improve your production, and also the quality of the goods that you're probably producing, right? I like the fact that I heard from the castor oil producer as well as the baker and the recyclers, and a very important element of what is happening in the world, right? So it's also important to look at the currency risks. We know that our foreign exchange has been fairly stable, but we see it going north in recent times. So those things are some of the things that we do think of. We look at trade receivables, and that is where our trade insurance come in. Sorry. So if I'm to summarize what we do, we have a short-term loan, 1 year, medium-term loan, 7 years, installment payment. 1 year loan is a revolving facility. Our trade credit insurance is there for when you need it. In the just in case, both political, both commercial, if somebody should go bankrupt, if somebody refuses to pay, you're covered. If there's a change in a policy, for example, the tariff issues that were bouncing just recently. If there are some changes in the policy, the credit insurance can protect you against those things, right? So we want to focus a little today on some of the specific products that Exim offer that we know will benefit an exporter. We look at the e-commerce funder, which once you develop, you want to upgrade, you want to get into the e-commerce space, talk to us. We can help you. So let me just put a plug. If you notice, our table is at the back. We have Daniel, Tanya, and Monifa on spot to answer all the questions that you have and whatever I'm presenting here today. So as I spoke a lot about the trade credit insurance, so I just bounced that one. The energy, the solar energy loan. We're in an environment where sun is something that we wake up and see every day. Some persons wish they could have that, but we have it abundantly, right? Why not use it to our benefit? When you can transfer your energy expenses to production, just think about how much more you can do and how many other miracles you can work within your business, right? We know that modernization is important, so it's important to look at the loan facilities, getting new equipment, getting motor vehicles, if so be the case, to move your production in different ways, transport your workers. I mean, those are some of the great things that we do at Exim. And if you should take a trade credit insurance and don't have any collateral to support your loan, then after 6 months, the same insurance policy can now be used as collateral support to help with your pre- and your post-shipping financing. So I'm just going to give you a little synopsis and a summary of the product. No, so the e-commerce funder, it is, as I said, to develop, to upgrade, or to expand your e-commerce infrastructure. It includes up to $5 million at 5% interest rate over 5 years. You can also use it as a part of your inventory support. So if you need to boost the inventory in order to supply that space, then you can use it right there. You can use it for the marketing, you can use it for the hosting, you can use it for the development of the, whether it be an app or it's a website, you can use it for that. So Amazon, Shopify, eBay, wherever space you're going on, you can use that as a benefit to get into that space. I will know the world. After COVID, everybody pivoted. Everybody know that since COVID has taught us a lesson that we don't generally have to be face-to-face with everything. So I'm encouraging everybody today, especially the exporters, to look at how you can use the e-commerce infrastructure to grow your business, right? Our trade credit insurance, as I made mention earlier, and Mrs. Bell spoke about it, is that if you can cover between 85 and 90% of your purchase orders that you're sending abroad, it may take out a 5% or a 15% out of your markup, but guess what? You can start again. So it's important to start again, right? So the rates are pretty low. Okay, if you see 60 cents in a dollar, that's peanuts to what you can lose. And that's not 60%, sir. 60 cents on $100. That's not 6%. Yeah. Eh? Oh, my mistake. And I appreciate the feedback. Thanks. Yeah. So I can confirm that you guys are listening to me, right? And I true I know reading is fundamental. I know you all just also reading and correct me. I appreciate it. All right. Our energy loan is, I think, is the best in the market at up to $50 million. As my counterpart at DBJ give you money to do audit assessments and energy audits and energy assessments. Using that funding, you know exactly what type of system you need. Come to Exim, 7.5% over 7 years. When I speak to the experts in the market, they say within 3.5 years, 4 years, the system pays for itself. Using the system as collateral, put in a 15% equity. I mean, to me, that's a no-brainer. It will improve and encourage the productive sector to move forward, especially if you're on a single shift system where majority of your production is within the ripe part of the sun. We're between about what? 9 o'clock, I think it's between 9 and 2, or about 8:30 to 2 within that period. Then if you're on a grid tie system, if you're generating more energy than you need, you also have an opportunity to make more money where you can sell it back to the supplier, main supplier within the system, right? So you need the equipment for your castor oil. You need more baking equipment. We can do that. You need a motor vehicle to transport your workers. You need a packaging system. You need just that, whatever you need to get your business running. Check us. Up to $90 million, competitive interest rate. We're still at single digits. I'll take the questions when I'm just at the end, please. Still at competitive interest rate. I think we're still at single digits, and I don't think we're going very far from there anytime soon, unless something drastic happens in the market. Up to 5 years, we have a level of flexibility where we can probably push it to 7 years. I see I only have 60 seconds left, so let me see if I can move a little faster. But importantly, I don't think much has been mentioned of this, but just being a member of the JMEA is a benefit. By being a member of the JMEA, you can access facilities at Exim to purchase light equipment. So I would encourage you to be a member of the JMEA. You can also use it for working capital support. You can get up to $3.5 million. It's a it's an arrangement that has been on the books for a bit. But we want to ensure that it's an unsecured type facility so you can access it. So not much collateral is required in that space, all right? You get up to 30 months because the money is not a lot for a business, so we don't think you need to stretch it out too far and stress out yourself, right? The question is, how do you apply? How do you qualify? You must be a registered business exporting or ready to export. All startups are on a case-by-case basis where we take a special look at it, and it's based on the proposal that is presented. Then we see how best we can look at it. It's important to maintain good credit history for the business, as well as there is some level of assessment that is done for the decision makers. And a business plan is important. Where you're going, how you're getting there, who you're taking along with you. Those things are some of the things that we look at. My recycler spoke about financial statements. The statements and the projections are important because as businesses, it's not as if you're a salaried individual where we know there is a fixed income every month. We have to do that assessment, so we have to look at the post and what the future looks like and how we put both of them together and see how we can analyze the health of the business and move forward, right? Currently, majority of our facilities are collateralized, but we have been a little flexible where we use equipment, motor vehicle, we use receivables, we also take inventory, and we all know everything is subject to conditions will apply, right? So when I finish with my questions, as I said, Daniel is at the back, Tanya is here, Monifa, myself, we're here. Consult with any one of us. Once you do that, then we'll send you the requirements. We'll put the requirements together. We start our credit assessment. Naturally, we're going to give you an approval. And then we do some disbursement. And importantly, it's the money talk. We want to partner and to grow with you. So as your business continue to succeed, we want to be there. We want to also guide you if we think, when we look back at the numbers as they come in, what is it that we can do to assist, how we can make it better for you. All right? I want to thank you all for listening, and for those who are reading attentively, I love that. All right, so question.
Thank you, Hopeton, for that overview on EXIM tailored solutions for exporters. And we're now opening the floor for questions and answers. Remember to introduce yourself by stating your name, the name of your organization, and the sector you represent.
Good morning. I am Pedro Garvey. The business name is Kingsmetropolitan Market, and we do agriculture, agro-processing. Hopeton mentioned the e-commerce. We want to pivot to, before I do that, I have land in St. Elizabeth, and I have capacity to supply agriculture products to any other businesses here for lease and to produce on a contractual basis, to plant for you. So think about it, I'm available, right?
Okay, you're putting in a plug there.
Yes.
Good.
So I am interested in the e-commerce. And you mentioned for getting the site up and for inventory. And you mentioned collateral. I am a salaried individual too. Would you consider if I could facilitate the payments from my salary to get the funding for the e-commerce?
Yeah, absolutely. We'll, as I said, we do our assessment, and based on what is presented, then we do have a flexibility to look at what you present to us.
Okay, all right. Thank you very much. I'll consider.
Okay, we'll take the next question.
Hello, my name's Sean. I'm
not hearing. Can you speak closer to the mic, in the mic?
Hello, my name's Sean. I'm representing PharmaCan Biotech Solutions and also PharmaCan Business Consultancy Services. In regards to the banks and the trade loans that they're offering, for agriculture. In regards to medicinal cannabis and the attitudes, what's changing in the banks when it comes to how they're going to adapt to what the rest of the world is doing, especially in places like Germany and in Australia, in regards to how it's no longer a narcotic? How is Jamaica changing in regards to their attitude in helping the Jamaica cannabis, Jamaica cannabis export or industry? What are they doing to help?
Okay. All right. We have 3 commercial banks who are going to be presenting in the next module. And I'm going to ask them to note that question and ask them to speak to that specifically in their presentation. Okay, so I'm going to just ask the 3 banks who are here, NCB, Bank of Nova Scotia, and First Global Bank, to just note that question and to speak directly to it when they're ready to present. Thank you.
Good morning.
Morning.
Colin Coley from the Jamaica Business Development Corporation. And our clients are in the MSME sector. So I just want a little bit explanation about the credit insurance.
That's you, Hopeton.
The slide. So the trade credit insurance, if I can use an example. I'm sorry, I'm pulling out your business again, right? So I have a purchase order for 100,000 US dollars castor oil to go to
Florida.
Bell Corporation in Florida, right? When I move my product from my production line to the wharf to go to Florida, I give you 45 days to pay me. Am I guaranteed to get payments?
No.
No. What could happen in that 45 days? Bankruptcy. The person just refused to pay because him said one of the box there. Product get lost. Drop off of the lorry, drop off of the ship. Right? First it's refusal to pay. You exhausted all the opportunities, exercise all the due diligence that you can, and the person still refuses to pay you. Then you can come to your credit insurance to get payment. That is the commercial risk aspect of it that it covers. So if they should pay, at least you should get back $85,000 out of your 100,000 purchase order that you would have sent to your buyer in Florida.
So it protects you against the...
Yes.
Okay.
The other aspect of it, suppose Mr. Trump decides, say, no more castor oil can come out US, right? But you already reached the port. Nobody's going to send it back.
Okay.
So that is where the political risk and exposure comes in. So you will get $90,000 out of your $100,000 when you make a claim on your policy. Most importantly, though, your policy needs to be up to date in order for you to make a claim. So it's an insurance policy. You're expected to pay premiums.
And you pay Exim Bank.
And you come through Exim Bank. We deal with our insurers, and you are expected to get payments from there.
Okay, I'll update my clients.
All right, thank you. But even before updating them, we're here. So we can update them as well and give them direct information.
Okay.
All right?
Okay, I think I have a comment from Mrs. Bell.
Because I believe in trade credit insurance so much, I'm going to tell you a story. When I was at Exim, one of my clients, who shall remain nameless, was a lobster exporter who exported to France. Had been doing it for years and years and years through Martinique. Unbeknownst to him, the company in France went bankrupt. and his shipment was 400,000 US dollars. That one non-payment took his company down. That one non-payment with an established buyer. Had he had trade credit insurance, he could make a claim against for non-payment and be back in his cash flow. It was one of the most heart-wrenching stories I saw. Because it protects you against buyers that you don't know. You buy brand new product, you want to export it to Canada, but you think the man has spoken to you and told you that it's a great, he will pay you, but he doesn't. Right? And it is for coverage after the larger when the product has already been received. And that you have tried to collect, but the man has not paid you. But it also covers against established buyers, because you don't know when big company in Canada or the US or the UK, you don't know how much financial trouble they're actually in. And that's what the product, the EXIM does. They assess the risk of this buyer to tell you whether you can trust to send your product and will you get paid. It is very, very cheap, 60 cents on $100. And it is worth the coverage when you're going exposed into a new market, or even if it is an established buyer, because it can happen. Do not forget that story I told you.
Thank you, Lisa. Okay, are there any other questions of Hopeton? Okay, so we are now at our final presentation in this module, which is going to, it comes from the Inter-American Development Bank, IDB, where we will turn our attention to the area of international financing. And to walk us through the various financial solutions for SME exporters, which are offered by the IDB, is Mrs. Terra Sigree Brown, IDB's Private Sector Regional Coordinator for the Caribbean. Ladies and gentlemen, please help me to welcome Mrs. Sigree Brown.
Good morning, everyone. Good morning. Okay, excellent. So I am Terra Sigree Brown, as she mentioned. I'm with IDB Invest, and I'll go through IDB just real quickly, just to set the context. I want to be a little brave just based on the panels, the discussions earlier, and I will open to questions during my presentation. So feel free to stop me. I have a lot of slides, and I'm sure the organizers will distribute some of these slides to you so you have the context available and ready. The overall session, this session is about development finance, and that's where IDB sits. We are a development institution similar to DBJ, to the Exim Bank, but we have an international community of donors and funders that brings together all of this to provide support to private sector, to government, and to develop the different regions that we operate in. So I want to focus, so we have, you said, great. So within the Inter-American Development Bank group, we have three different areas: IDB Invest, IDB Lab, and IDB. IDB works with the government. We work with different governments in our region, 48 countries across Latin America and the Caribbean. And from the Caribbean, we have 6 member countries. I'll add to that Suriname, Guyana, some of the others in the region. And we work directly to help the government to provide those policy support that is required in the case for SMEs and private sector to actually be productive and to grow, right? Because at the beginning, Lisa Bell mentioned a lot of the bottlenecks, a lot of the issues that affect SMEs. IDB Invest provides support more to private entities, private sector entities of the larger scale. And IDB Lab is the innovation laboratory of the IDB group. And this is where we provide funding to early stage businesses that are doing developmental focus work. So the group leads, we support companies, but we also support the government, and we support accelerators and incubators such as like JBDC that is here today. how IDB Lab looks at their support. And it's interesting, you have to understand where the financing is coming from in order to understand who you're going to for money, because they will demand certain things from your business and from you that you need to be aware and ready to deliver. A development finance organization is very interested in impact. Impact to this country, improving lives such as IDB. We're looking to improve the life of every member of society in the country. And underpinning that is going to be our SMEs, who create the most jobs, who provide some of these benefits and hire people and create these levels of business that is required. I'm going to skip that because that just delves a little into what we do. So from our financial instruments of IDB Lab, we have three different instruments. We have direct equity, and I'll be very upfront with you, this is the hardest thing to get. This is one-on-one direct investment in your business, and I'll go into the criteria of that one because it's looking at some level of innovation and scale, and that is required. Then we have funds of funds. We invest in venture capital funds, in private equity funds that then invest in other businesses. So I believe DBJ mentioned that they have done like 10 investments in venture funds. I believe we have done close to 600 since we have been operating in Latin America and the Caribbean. So we're looking for more fund managers that are operating within our region in order to provide more support to our businesses in Jamaica. And we do have a few private equity, but less on the venture capital and seed fund. And I think that's where we really need more intervention at the seed level. And then we do our loans and debt. This again is direct, and I have a slide that speaks to that. I want to focus a little on our criteria for investment. And this is the first thing, and I think it has been mentioned several times. For us, we need the business to actually have traction, meaning you're earning a revenue, you have proven track record, and how do you prove that you have this track record? It's through documentation. It's through your financial statements. And I know audited financial statements are costly, and we went through all the different issues before, but I would recommend even start with your in-house statement. Start documenting, start having the proof of that your business is generating revenue and that you're managing your expenses and that your business is actually growing. Because that's how an investor will be able, they can't take your word of mouth to say, I am growing. They need to see proof of this. So we're looking for that business traction. We want a clear, for IDB Lab, because it's the innovation lab, we want clear indication of innovation. So I heard somebody talking about getting some new digital commerce, e-commerce platform to integrate in their business. This is some of the things that we're looking for. We're looking for your financial solvency, so you must be profitable, because if you're going to take a loan, you must have the capacity to repay. And then we're looking for impact. It's all about, are you addressing the food security challenge that we have in our region? Are you addressing poor and vulnerable communities, integrating them in your business? These are things that we like to hear. How are you treating with gender? How are you treating with the climate issues? How are you integrating that in your practices? And this is verifying, this is what I was saying, you will have this. It gives you the full gamut of how we look at investments from direct equity. We do Series A and B, up to $3 million in direct equity. For the Caribbean, we have lowered our minimum amount to $500,000 because this was up to $1 million, but we have indicated that we do need edited size, ticket size for the Caribbean, and we have made some of those adjustments. I've put some examples of businesses that we have funded with direct equity. This is more geared towards technology businesses who are scaling and growing beyond the borders of where they operate. For our funds, I'll skip into our loans. We also provide loans around natural capital, so we don't structure it in the same way as specific industry as here, but we cover natural capital, so even agriculture, everything with agro-processing falls into this. Essential infrastructure, fintech, health, education, and talent and employment. So this is the gamut of how we support. We provide financing from $500,000 up to $5 million, and we do it over 3 to 5 years repayment. As I said, at the core of what we're looking for is businesses that are making an impact on whether it's climate, on the poor and vulnerable, on the environment. So this is core to what we are looking at. As I said, I will take any question throughout. So how do we solicit some of these businesses? We actually just closed a call for loans. It was closed June 30th. However, the platform, and I'll leave the QR code there, is still open, that you can use it and go in and see some of our criteria, see some of the information that we ask you for. But what we do is put out these calls periodically, because not everyone will know that they can come to us. So when we shoot this out on social media, we have a big campaign around it, and we try to attract as many proposals for funding as possible, and then we go through this review period to look and to select the best proposals that we have received. And we have our local team that works on these transactions. So this is just going through our evaluation process. Once you've submitted your application, we go through this pre-screening to determine your eligibility, and we conduct due diligence. So once you have gone through a process with IDB, I could almost say you can get funding from anywhere else, because it's a rigorous process that ensures that you are prepared for international investments in the future, not only for us, but for anyone else that's coming in. And I think one other important thing I want to add here is that we don't compete with the banks, with the traditional banks. Even from IDB Invest, we try not to compete, because we are plugging that gap sometimes that the banks may not be willing to support. So if you have a technology business, you have a specialized business that the bank is not fully au fait with, we are the risk takers at IDB Lab that take on this additional risk for new and evolving and emerging technologies and solutions that is coming out. And that's a QR code I mentioned before, so you can just use it to access. And I think I should be within time and can take some questions. Oh, I thought I was super efficient, so no questions. Go ahead.
Hi, morning everyone again. Just to introduce myself, my name is Kimara Gentles, the founder of Indulge Your Taste Buds, which we're a wellness bakery, boutique bakery if you want to know. Now, this is not necessarily to IDB, I think, but just a general question, because majority of the persons here are giving us the process or the documentation of how for us to access a loan, right? Which for me, loan equals debt. But just to draw from that, right? Do you offer grants as well, or is there the means to offer grants as well? Because for me, as my small business, I'm just 2 years old, but I have big dreams. I used to work as an operations manager for a company before, and then life chose to life, and I chose to resign and get up and fix things, right? So I want to know if you guys offer, any other banks here or the different forums here, offer grants for persons who are wanting to go the grants route. I know the grants route are normally like rigorous, as you're saying, in regards to that. But I think that for me and my business, going to want to export the grants would be a more better means of having me properly regulated towards a global concept, if I'm not mistaken. So that's just the general question that I have, like, are we going to be informed of what, if you guys offer the grants and anything like that, if I'm making sense?
Sure. So I agree with you. At some stage of your business, you need some grant support. You need that early support, friends and family and grants. IDB Lab does provide some grants. At this point, we have just adjusted our strategy and we provide what we call technical assistance to more incubators and accelerators, because we don't have the bandwidth to provide grants to each business because it's one office with a few people, right? So we do provide support to business accelerators, different programs that support SMEs along their journey. And we provide those grant programs, help to develop the curriculum, the support that is required for them. Another angle that we also take is through the IDB portfolio. We do provide grant programs. So there was some mention of Biggie program with DBJ. We provided that funding to the government to be executed by DBJ that creates these different programs that supports different businesses along the life cycle. So you may have an innovation grant, you may have something on patenting, and right now we're having those discussions to see what next is needed. After we have done Biggie, where are the gaps now that needs to be plugged if there's another support that is needed? And conversations like this is very helpful because now we need to know that, okay, yes, for the exporters, there are certain things that they need. There are certain processes that needs to be placed, hand-holding that they need, capacity strengthening, and all of this feeds into when we're developing new programs to support through institutions. So that's how you get grant funding at this point. Any other questions? Sure, go ahead. Just because the helicopter is overhead, I'm not hearing you clearly. And anyone else have a question, you can just form a queue so that we don't go over time too much with the questions.
Good morning.
Good morning.
The name is Mortimer McPherson. Just one question. Some years ago, I remember working with the IDB in what was called at the time the Quality Craft Enhancement Program. I was the advisor to the IDB consultant at the time. What I want to really know, because there are a number of craft producers in Jamaica, and also institutions like the Blind Society people who need help. Do you still have that program in place?
No, we don't. So as time evolved, we are looking for where the gaps exist. And if that program ended, then probably there is a discussion for what next needs to come. However, I started off by talking about development institutions and what drives them. And sometimes it is driven by the themes also of our donors. Where are they putting the focus? So there needs to be some more support with the orange economy. But right now, we are re-looking at the orange economy to see where there could be additional support. But I would say to you, over time, as new management and processes changes and government change, then our strategy and priority areas evolve, right?
It would be good if you could put a plug in for that, because I have come to believe that there are many skilled people in Jamaica. Many of them are disadvantaged, and they don't have the wherewithal to push themselves forward. And at the same time, we don't have sufficient, what I call, government structures in place, neither policies in place to assist them in coming up higher. It's a pity that you have to pull that program, Because I remember we worked with Vietnamese, the people from Belize, the people from Suriname, and we got a whole lot of things done. It would be good.
If I could just respond to that again. If there is a private entity, private sector entity, association that wants to drive that agenda, you can reach out to us and have that conversation and let us explore what is possible.
Thank you very much.
Okay. Thank you very much. You've been a great audience.
Thank you, Terry-Ann, for those valuable insights on how our local businesses can access technical support from the IDB. So, in the interest of time, we're going to move to the second module, which will focus on traditional financing options, where we will hear from 3 of our Jamaican commercial banks, who will each share the products, services, and support they offer to exporters as well as potential exporters. Our first presenter is Ms. Pamela Douglas, who is the head of the small business banking for the North and Central Caribbean at the Bank of Nova Scotia. She will be followed by Mr. Ramon Richards, who is the corporate banking manager at First Global Bank. And we will end the module with a presentation from Ms. Kimberly Martin, who is the Assistant Vice President for Corporate Solution at the National Commercial Bank Capital Markets. So we will have those 3 presentations in that order, starting with the first presentation from Ms. Pamela Douglas from the Bank of Nova Scotia. And again, just to remind you, just note your questions, so that at the end of the 3 presentations, we will open the floor for you to direct your questions to the respective commercial banks. So please help me to welcome Ms. Pamela Douglas from the Bank of Nova Scotia.
Good morning, everyone. Okay, I'm very pleased to be here representing Scotiabank at this Exporters Information Session hosted by JAMPRO. Today, we're going to explore the financing options that can help your business expand, manage risk, and operate confidently in international markets. So, as you know, exporting brings growth, but also complexity. So we have delayed payments, foreign exchange risk, and production funding can challenge your cash flow. That's where Scotiabank comes in. Here in Jamaica, Scotia Group has been around for over 130 years. This year, it will be 136 years. We offer full financial support through our banking, investments, and insurance arms. Being part of Scotiabank's international network means we combine local knowledge with global expertise, which is critical for navigating trade. Scotiabank, we're known for long-term relationships, a differentiated service model, and a consistent focus on innovation. Everything we do is designed to help you to optimize cash flow, improve working capital, and simplify your banking operations. So we know that no 2 exporters are alike, right? You may be shipping goods to the US, managing a seasonal product line, or just fulfilling a one-time international order. Whatever the case, at Scotiabank, we tailor our support to your needs. We take the time to understand your cash flow cycles, customer relationships, and risk exposure so that financing solutions fit not just today, but for a lifetime. it would be remiss of me not to speak about Scotia Online for Business, and that is one of the tools that supports financial management. The digital platform helps you to monitor account activity, set up multi-user access and approvals, and view your international accounts in one place. It is especially valuable when managing transactions with global customers or suppliers, giving you better visibility and control your business financing. So we're going to be focusing on financing options for exporters. So starting with the traditional options, and some of you might already be familiar with some of these. We have working capital loans, and these help to cover short-term operating expenses, whether it's raw materials, shipping costs, or even staff wages. They're ideal when you have an export order to fill. We know how difficult that can be, but payment comes only after delivery, so we can all relate to that. We have operating lines of credit, and we can think of this as a financial cushion. It's there when you need it. It gives you access to fund when you need it, and you only pay interest on the amount that you use. It is perfect for businesses with seasonal revenue or late-paying customers, and in Jamaica, we have quite a number of those. You draw what you need, pay interest only on what you use, and top it up back as you collect payments. So, term loans for asset purchase. These are best used for larger investments, machinery, or even warehouse expansion. As your business grows, you might need to expand your warehouse. They come with fixed payment terms, allowing you to match your payments with the revenue generated from the asset. And of course, we have our business credit cards. And these are great for managing smaller purchases like your travel, your marketing, software subscription. At Scotiabank, you can get up to 5 cards per account, and we offer up to 150,000 miles on the card per year. So our cards offer tracking tools and multiple employee cards, making them a smart, flexible option. So let us move into our trade financing instruments, which are purpose-built for international transactions, and we're all exporters here or aspiring exporters. So we have letters of credit, and these are widely used to reduce payment risk. Your buyer's bank guarantees payment once you ship the goods and present the correct documents. For you, that means more confidence to fulfill large or new orders. And if needed, we can confirm the LC, adding our guarantee on top of the buyer's bank. Documentary collections, and this is a step down from the letter of credit in complexity and cost, but still secure. Your shipping documents are only released to the buyer once they make payment or agree to pay at a later date. It's a good option when there's some trust in the relationship. Trade loans. These are short-term loans to help you bridge the gap between shipping the goods and receiving payment. We know how difficult that gap can be. So there's a pre-shipment loan that helps you to fund production, and a post-shipment loan that gets you paid quickly after goods are shipped, even if your buyer pays in 30 or 60 days. All of these are self-liquidating, meaning they are paid off when your export proceeds come in. And best of all, you can access and manage these instruments digitally through our Trade Express Elite Plus. And it's a secure platform that speeds up documentation and simplifies tracking. So you can apply for it's a self-service hub for trade financing. You can apply for your letters of credit, submit documents, track transaction status, and communicate directly with our trade team. And it keeps things moving, reduces errors, and gives you more control. As an exporter, you're exposed to currency risk. Scotiabank offers tools to help you manage this. So, spot for FX. So if you want to sell your foreign exchange, You can do immediate conversion with us. Forward contracts, which let you lock in today's exchange rate for up to 180 days. And you can trade FX and even negotiate rates online. So you can use Scotia Online to purchase foreign currency. And this ensures you protect your margins and reduce uncertainty. We also have a treasury team that can help you go even further, especially if you're exporting at scale. We build FX hedging strategies, advise on interest rate exposure, and structure financing to match your business growth plan. So to close, I'll just say exporting should be an opportunity, not a financial burden. At Scotiabank, we have the tools, the expertise, and the commitment to support your journey. Thank you, everyone. Okay. All right. Thanks.
Good morning, everyone. So it's certainly a pleasure to be here with you all to present on behalf of First Global Bank to advise you of the traditional financing options that we offer. And let's get right into it. Now, today we'll be looking at the financing products for exporters, MSME supports and onboarding, loan qualification and documentation tips, and the handholding support that First Global Bank provides, particularly in the areas of financial literacy and credit readiness. Now, first of all, who are we? We are First Global Bank, your trusted banking partner. Our mission, to empower people to get ahead in life and business. Our vision, to be the leading digital bank in Jamaica with first-class customer experience. And of course, we're part of the Grace Kennedy group of companies. And we all know about Grace Kennedy. Grace Kennedy is committed to the development and empowerment of our fellow Jamaican citizens. So of course, you know that First Global Bank is here to support you. We believe in partnering with you for sustainable export growth. And that is why we must acknowledge JAMPRO for putting on an event like this where we can come together and let you know of the options that are there to support your business. Our exporters, as was mentioned before, you are the backbone of our economy. When you do well, when you're able to expand into new markets, then that have a direct transition into the GDP of the country. And that is why traditional financing is so important, because it's a proven path to sustainability and scaling. What are the effects of financial development on growth? 1, strong financing channels empower exporters into global markets. 2, traditional products like trade finance or export loans fuel growth in early to mid-financial deepening phase. And 3, increased private sector credit correlates with higher GDP growth, especially in developing economies. So essentially, where there is financial development, then we all grow together. Jamaica's economy will benefit. What are these financial products, though, that are offered by First Global Bank from which you all can benefit? We'll be looking primarily today at our line of credits, and we know that we have a wide range of products, but these ones we think you'll be able to benefit from today. The lines of credit allows access to funds almost immediately. You are able to access it as you see fit, as needed by your entity. And the repayment of these facilities is done in such a way that it is not putting any unnecessary burden on your cash flow. And of course, once repaid, then you can reuse as necessary. The products that we'll be speaking about today are our credit cards, revolving facilities, and our overdraft facilities. And most, if not all of us, are aware of what a credit card is and may have one in our possession. It's what we could describe as a revolving line of credit on a plastic that you walk around with. It allows businesses to spend money up to a set limit even if they don't have the cash right away. And if you pay on time, you never have to pay interest on your credit card. For businesses, credit cards help manage daily spending, improve cash flow, and keep track of costs. And when used wisely, they can provide flexible access to funds while keeping financial records organized and helping teams stay within budget. And if you look on your screen, you will see that our credit cards also come with some perks. You're speaking about cashback. You're speaking about our US dollars credit card that allows you to conduct large foreign currency transactions. Travel protection, when you use the card to rent a vehicle, as well as travel insurance, when you use the card to book your ticket. Also, split limit control for team spending. What about our revolving facility? Well, a revolving facility is a line of credit that lets companies borrow, repay, and reuse funds up to a set limit, making it ideal for managing short-term cash flow and daily operations. And listen to this part. Interest is charged only on what is used. So if you have a line of credit of $100 million and you draw down $20 million, that's the portion on which interest will be charged. These facilities offers clients efficient access to funding while supporting day-to-day operations with financial agility and control. Now, the third facility is our overdraft facility. And an overdraft facility allows a company to spend more than what's available on their bank account up to an agreed limit. It helps businesses to manage unexpected expenses or cash flow gaps without disrupting operations. Again, interest is charged only on the amount overdrawn, and once the account is back in credit, the facility can be reused as needed. Now, why do these facilities work? Why are they so beneficial, particularly to our exporters? One, no structured repayments. So you are able to adapt these repayments to your sales cycle. Two, we've mentioned this extensively. Interest is only charged on what you use, which helps you to control your cost. And three, these facilities are available in multi-currency, allowing you to manage your foreign receivables and payables. And most importantly, fast access to cash. Whenever you have a need for cash and you have a line of credit available, there's no need to come to the bank and send in a full application. You just advise your relationship officer that you have a need and they will work with you to have the funds disbursed to your account or have you gain access by whatever means necessary. What are some ways that First Global Bank supports our MSMEs? Well, we believe, again, in ensuring that our customers are equipped to compete in this market. And that is why we have relationship officers who are trained, they're skilled, they're knowledgeable, and dedicated. They will offer you the support that you need to ensure that your business is able to achieve all its desired goals. When it comes on to account setup, well, we will provide practical help with that. So we're not just going to send you a list of documents and tell you to go and get them and come back and send the forms to you. No, we hold your hands, let you know how you can get these documents, assist with completing documents, etc. And this extends to all our products. So if you're interested in our merchant services, point of sale, credit cards, we'll provide you with the guidance on how to achieve these. We realize that we are living in a digital world. And the fact is, if you are not digital, you realize that you will be a step behind your competitors. So again, First Global Bank will give you the tools that you need to compete. That includes our e-payment and mobile banking facilities. We will assist you with managing your cash flow and credit management as well by providing advice for seasonal cash flow challenges, supporting improved credit scores, and structuring overdrafts and revolving credits to match your sales cycles. Also, hands-on help will be provided as it relates to loan application and qualification. The documentation that will be required will provide guidance as to how to get these. Even guidance on submitting a business plan and cash flow projection will be provided. Our friends from the DBJ are here with us, and we have worked closely with them in ensuring that our customers get access to the various programs that they have, grants, so that they can continue to scale. One of the advantages of being a client of First Global Bank is that you get access to the Grace Kennedy ecosystem. So now you're speaking of not just commercial banking, but investment services, insurance services, digital payment solutions, FX and Cambio services, and remittance services. So yes, you are able to access the full strength of the Grace Kennedy Financial Group all under one roof. What are some tips, though, that we can give you as it relates to qualifying for your loan and putting together the documentation? Now, I did hear someone speak earlier about you needing to be in business for 5 years to qualify for a loan. Typically at First Global Bank, if you're in business for 2 years, then you can approach us. But what if you're in business for less than 2 years? You can still approach us because we have products and solutions that are geared towards helping businesses that have just entered the market, that are in business for as low as 6 months. We can assist you. We look at your potential for profitability and growth. And of course, there's some basic documentation that you will need. This includes your business registration. So whether you're a sole trader, a partnership, a limited liability company, you are required to be registered with the Companies Office of Jamaica. Your TRN, your financial statements, and let me also add that audited financial statements are not required for every transaction. If you're applying for a loan of $50 million or less, there's no need to get audited financial statements. All right? So take that away from me today. All right. Now, what are some tips? I hope I still have some time remaining. Okay. What are some tips that we can give you, though? Because what we want you to do is present a package to the bank that is likely to be approved. Some tips for you. Firstly, I don't know how many of us here know what QuickBooks is, but this is a solution that allows you to be able to manage your own accounting. It's an app that's available online, so you can go ahead and download it and track your own expenses, the inflows, etc. That helps you to keep track of what's happening in your business. And what it does is that it shows as well that you are able to properly manage the business. It builds credibility with the banks and investors. You have to have a business plan, because if you don't have a business plan, then you don't have a framework of showing exactly where you intend to take the business. As well, register your business that was spoken of earlier, and ensure that you're filing you're completing your annual filings and paying your taxes on time. We do provide some handholding support to ensure that you are credit ready. So from the moment you approach First Global Bank, then we will help you to understand credit. This is going to help you to improve your credit ratings. We help you to build strong financial records. And one way that you'll do this is by ensuring that you're repaying your facilities on time and as agreed in your commitment letters, etc. secure financing, First Global Bank will be able to grant you the financing that you need to continue to scale and to grow. And of course, when you are doing this, then you are able to export confidently. So we're going to be there with you every step of the way. And I know I heard the sentiments. It was quite disheartening to hear, but rest assured, we want you to come and speak with us because we want to understand the challenges that you have, and we want to work with you to ensure that we provide solutions that is going to help your business to continue to grow. You are encouraged to leverage the ecosystem of support that is there for your benefit. So we also connect you with these various entities that will help your business to continue to grow. So of course, we're speaking of JAMPRO, who have put on this event for us all, Financial Services Commission, the JBDC, Small Business Association of Jamaica, the JMEA, DBJ, and last but not least, Grace Kennedy Financial Group. So, as we come to the end of the presentation, I encourage you all, let's build together. And we do that by taking advantage of the traditional financing options that are there, and it comes along with modern support. Yes, we realize that we're living in a modern world, so it's not the same old products of long ago. We're learning how to tailor these products to ensure that they can meet the needs of your business. So you can come at the end of the session, speak with my colleague, Rashina and I, and we will be able to have that one-on-one as we learn how we can grow together. Remember, at First Global Bank, we stay true to our mission statement. If you remember it, we help people to get ahead in life and business.
Good morning, everyone. So we've all been seated for a long time. We've had a lot of discussions about various aspects. And before I go into my presentation, I wanted to just dig a little deeper with the crowd and hopefully get your response as well. The sense that I would have gotten from some of the discussions that would have been going on earlier is that there is this almost antagonistic relationship between the business owners and the banks. All of these issues, right? So whether, it's the documentation, is it too hard to get all of the things? Do we really need to ask for all of these things? Do you know what is the best kind of financing for you? Because we're here to talk about the traditional financing options, which are great and certainly have their place. But there's a whole network, a whole universe of all sorts of financing options for businesses that could be helpful for you as well. And I think we're going to talk a little bit about those later on, but I just wanted to put that out there. So before I begin, I just wanted to ask a couple questions. The first one is, you are all in business, right? You have this small thing that would have probably started small and you would have nurtured over this time. You'd have put your time, your energy, efforts, your money into growing this business into something that is a success, something that you can be proud of. And I'm sure all of you have aspirations to grow it even more, right? Oh, no. Oh, you're moving the podium. Still need it for now. Not quite yet, thanks. Right, so I was saying you have these aspirations to make it even better, grow it even bigger. So I wanted to ask, if it is that you are going to approach a financial institution for funding, first, do you know what type of facility you would approach for? And how would you make the first step in making the approach? Any brave person want to take on that question? Yes?
Morning. Olu Roberts is the name. Let me stand. Sorry about that. Olu Roberts is the name, and I represent Hello Agriculture, and we're input and technical solution providers. What can you clarify the first part of the question just asked?
So I was saying, if you were going to approach a financial institution, what facility would you approach for, and how would you do it? How would you make the first step? Well, a loan, right.
Okay. It's depend. All right. Based on our type of business, we're looking for loans and grants preferred, and that would help us to start what we're trying to do in terms of getting equipment. But there's a lot of policy issues that I've identified because I'm a returning resident and studied abroad, now back home to provide controlled environment technology. But I realize there are so much policy challenges in receiving loans, finding programs that support startups or support just general innovation. The closest thing I've seen is IDB so far.
What would you say is the biggest policy challenge? So if you were going to approach, I mean, in your mind, what's the thing that makes you apprehensive or uncomfortable or makes you say, boy, I don't even know if I want to bother? What's the thing that gives you trepidation?
Okay, I really like this exchange because it gives us in real time. So, all right, for instance, we do indoor farming, and I need to bring in protected agriculture resources and technologies, but there's nothing much on the books here for, say, LED lighting for indoors. And when you go to customs, they're seeing LED lighting for just lighting a room, but we use it for plants. In that case, when I try to find financing or even through the customs, there's nothing on the books to support that. And it's just and there's a lot of red tape to get through that process. And we keep hearing from abroad, hey, come home and innovate, come home and change what's happening. And we've seen the future, and I call it the future because we've seen what's happening outside. But if we're in a bubble and people are not moving around to see the changes that's happening out there, and if you look at agri-technology in terms of Latin America and the Caribbean, Latin America is leading us way far. We're not doing a lot of innovation readily here in Jamaica. So accessing those funds and this is a serious challenge.
Thank you. Thank you for sharing that experience. I could take one more. Any other brave soul want to tell me first? What would you ask the bank or financial institution for? And what, if anything, is a challenge?
Hi, my name's Sean again, representing PharmaCan Business Consultancy Services and PharmaCan Biotechnology Solutions. PharmaCan right now, we have an opportunity to export medicinal cannabis into Europe. And my business partner, who is Jamaican, has advised, basically he's my advisor, and he's telling me that the attitudes in Jamaica when it comes to medicinal cannabis is old, and basically the world is changing. So I just want to understand, really, in regards to the financial options for agriculture, exporting, what's the attitude around medicinal cannabis? What is the attitude for if a medicinal cannabis person wanted to apply for financial and they've got opportunities, business plan, return on investment, all of that is all there. What's the attitude for that?
Well, that's a good question, huh? And I think the honest answer is that from the traditional banking sector, the attitude is not favorable. That's just the bottom line. So for someone in your position, what I would recommend is to look at some of the other financing options that are available out there in the market. So if it's private equity, private credit, that kind of situation, and I know my colleagues later on in the day are going to speak more about how to access those types of facilities. But in the traditional banking space at this time, I don't think we have gotten there yet, if we're being very honest. Yes?
Just a follow-up. So who is addressing Yeah, just a follow-up to that question. Who is, on your statement, who is addressing those policies then? Because things are changing so fast. So who is addressing those challenges? What working group is there to address in the banking association or the financial space itself?
So I think change in that sector would come from advocacy, right? So you have I think there's a licensing authority. There are other associations that, that represent this group. And I think that's where it would have to begin, with advocacy from those institutions to the traditional financial space to change those policies. What about my institution? Yes, we're a part of that group. We would hear the advocates of, certainly. Okay, so I wanted to start with this exchange just to understand it more, right? To understand what are the challenges, because to me, it's clear from the questions I've heard, from the exchanges that we've had, that there is this tension, there is this discomfort. And there are a few things that I would want you to keep in mind before I dive into it, and I won't be long. I'll just show you a few products that I think would be beneficial. Yes. Right, so I just wanted to dive into it and look at a few things that will help you right off the bat to alleviate some of that discomfort, right? So one of the things that the banks have been looking at, and I think everyone has said this throughout the various presentations, is that we are on lending, if we're doing a loan, funds of the depositor. So there are certain things that they're always going to ask for to make sure that they have covered the bases, they've mitigated the risks, and they can show to say that, yes, we have been prudent with the deposits that we've been given by our depositors, right? So how does that help you as a business? And it's something to be mindful of, because if you approach it with that in mind, how do you mitigate it? How do you show this track record? Then it puts you in a very, very good position when you are making that approach. So one very, very, very simple way that you can do that is to make sure that when you're doing business, those cash flows run through your bank account. That's a really, really simple, easy way to start to build up that track record that you will need in order to access a facility. And there's a lot of ways to do that. You can open a simple checking account when you get your payments, you make sure it's deposited, or if you have a point of sale system, which I'll touch briefly on, just making sure that those payments come through that kind of electronic means, then you can start to build that track record. As a matter of fact, there is a product that we have at NCB that once you've had a relationship with our point of sale systems for long enough, and you show those cash flows coming in, there are some loans that you can pre-qualify for. So that means you eliminate that whole process of coming to with the application and the financials and all of these various things that you would need to do, because you pre-qualify based on just those flows coming through your point of sale system. So that's one that I wanted to point out right away, one easy way that you can help yourself to start to access some of these financial solutions. So let's look quickly at some of these merchant lending solutions. So that's the one I wanted to tell you about. The merchant and balance facility, where you can access volumes based on your point of sale terminal. I think this one is quick, easy. It eliminates a lot of the bureaucracy that you were talking about. So it's something to consider. I think the payments and electronic payments in particular is a very, very important area for SMEs as well, right? It's particularly for the smaller ones, because you want to be able to, no matter where you are, if there's a fair, if there's a pop-up, if somebody comes to you and says, hey, I want to take your product, you want to make sure that there's a way that they can pay you easily and that you get credit for it too when you're looking at those facilities. So at NCB, we have a number of electronic payment options where you can get a physical point of sale machine. It could be something that is done on your mobile phone. That makes it easy. If you have the right phone, you would be able to tap and process a transaction right there on your phone. And this is running through your bank account, so you can show clearly these are the flows that are coming from your business. So these are some of the ways that you can just put yourself in a good position to be able to access some of these facilities. So let me move quickly. Now we're running out of time. So 2 facilities, up to $25 million available through that first one that I mentioned. And then there's another one, a quick biz facility. If you are in business for 1 year or more, you can access this facility up to $15 million. Again, this is also supported by the DBJ if you need those guarantees, if there are any issues in that regard. So I just wanted to bring these 2 in particular to your attention. So we look at, this was just one of the facilities that we do have available to our businesses, the commercial motor vehicle loan, if it is that this would help to further your needs there. I did want to touch quickly on the electronic payment solutions, and one in particular is our payment button. So in addition to the electronic payment systems that we have that are available either through the machine or through your phone, if you have a website, for example, that you are selling a product for, what we have is these online payment buttons that will allow you to accept credit card payments, both locally and internationally, through that mechanism, and those funds do go directly into your account. So that is another way that you would be able to make that sale and accept payment on the fly at any point, and it's another way that you can build up that track record that we have been talking about and trying to eliminate some of these issues and some of the challenges that you have in accessing those loan facilities. So I think we're out of time, but if there's anything I want to leave you with, we have one last question there. Yeah.
Good morning.
Yes.
One quick question. What are good examples of collaterals, being that his equipment for his business are not good collaterals? Could you please give me examples of good collaterals?
Well, I don't think there is good and bad collateral. I think there is collateral that is more acceptable to the financial institutions. Of course, the most popular one is real estate. That one usually is the preferred or most acceptable collateral. But there are others as well. I mean, there are instances, depending on the type of business, where receivables could be used as collateral. Motor vehicles, some types of equipment sometimes are taken. And even if you don't have, so for example, what might happen sometimes, right, is let's say that you have equipment that is valued at $100. Maybe you won't get credit for the full value of the $100. Maybe you'll get value for $50 or $40 worth of that equipment. So it really depends. I mean, that would be a discussion between you and your banker to sit down and go through and say, okay, these are the things. How do we choose what's the best thing that we can use in your particular situation?
Okay. I want to thank all 3 presenters, Bank of Nova Scotia, First Global Bank, and NCB. Are there any additional questions? Would you like to, I'm going to open for additional questions to address to any of the 3 banks. Maybe I'm going to ask all 3 presenters to just come forward, take any additional questions.
Okay, thank you. We would all agree that climate change is real. I listen keenly and have not heard any of the presenter mention about climate financing, such as climate credit insurance. Do we have this type of financing available? Thanks.
Well, that is not something that we offer at Scotiabank at this time.
No, not at NCB either. I think from what I understood from your question, you can correct me if I'm wrong, you want to protect against the risk of some climate event? That's what you're speaking about? So that would more be an insurance product, I would think, not necessarily a loan or a financing type of facility. The insurance may be a better fit there. No, well, it's not something that we have at this time at NCB. The closest thing I can think of to that is insurance. I would be an insurance product.
General insurance. Okay, thanks.
Don't know if...
No, same here, not at First Global Bank at this time.
Hi, afternoon. Christine Townsend, Jamaican Ideal Spices and Herbs. My question is not to the commercial banks. It's really to DGB or DBJ or Exim Bank. And I've been on quite a bit of roadshows. I've gone on missions with Ministry of Industry and Commerce. I mean, I see personally where our businesses can grow and that we, especially as small businesses, are making deep impacts in this country. We contribute to GDP and there are so many potentials. I understand because I'm coming from banking. I've spent 17 years in banking. And I think I know most of the things in order to be compliant. My business is 11 years old. But all of us can agree, which is what I hear from everyone from time to time, there is so much challenge in accessing finance for whatever reason. So my stupid question is this: with all of the money that DBJ has, because we're not getting the monies directly from you, the government is the one that has the money to give to us, and there's a lot of money out there, I realize. I mean, I can't be negative about the government wanting to help us. So since there are so many challenges and it seems that there's some gap there while we are not accessing these funds, can then, and I'll say this to Mr. Nicholson from Exim Bank, and who is it here representing DBJ? It's not for the commercial banks. Can you then be our guarantors? So instead of accessing loan facilities, right, can you then be our guarantors in accessing these funds?
All right, thank you so much for that question. And I like the way we are thinking in the room. And like I said before, we're open to any particular suggestion that you may have as to what would be able to assist you in the best possible way. You'll see even in the coming weeks a rollout of a product that we have spent a couple hundred hours across sector groups, across financial institutions, to see how best we can design a product that will be targeted, that represent a targeted intervention for entities like manufacturing and agriculture. So we are open to receiving that sort of feedback. It's something that we could probably look into. Yes, we will have supported through the credit enhancement facility. To what extent that can assist you, your particular situation, we're not sure. So if we can have a deeper conversation as to what exactly are those barriers, then we can offer a solution to deal with it. So I would say to all of us, I know each business is unique, and sometimes access to finance, the bankers will tell you no two credit is the same. No two credit is the same. And you might very well leave from one institution and go to the next and probably get something favorable or maybe the same response. No two credit is the same, and so your issues may be unique to you. To the extent where DBJ can offer a single product that has a broad-based solution to everybody, that's a possibility. Some areas we have to just deal with certain gaps that will allow us to release the capital into the sector. But like I said, if it is that you have a specific concern, let us know those specific concerns as it relates to your particular problem, and we will look at a solution that we can develop to address it. All right? Thank you so very much.
I retired in 2016. 2008, I registered my business. And I started coming to forums like these and have seen the gamut. Mr. Gentleman just asked, because the government is willing, IDB, DBJ, but when you get to the bank, you're stuck, you take a credit card, or you take their loan, which is a lot of the times almost impossible to get. He wanted to know where's the choke point. As far as I have experienced, that's where it is. I've had accounts with all three banks that have spoken this morning. And my experience with every one of them since 2008 is still the same. So, I guess the solution is going around the banks. Over any other road except through the banks. That's my suggestion.
Thanks for that feedback. And it's good to hear from you, to hear the concerns. We appreciate it. And I must say that we do understand that over the years you might have had certain experiences. But Rashina will tell you that one thing that we are mandated to do now, more than ever, is to go out to the customers and listen to them, hear what's happening. So the days when we just sit in the office, or when bankers just sit in the office and then, just roll out products and then whatever, when you come to us, then you fit within one of those profiles or whatever the case might be. Those days are gone. We are now looking to hear from you as to what the challenges are and how we can tailor our products in such a way to ensure that you are being served. So you are encouraged to, I know you spoke with us at some point in the past, but please give us a chance again, because we really want to hear from you and to right what was wrong.
Yes, thank you so much for that. Well, in order to provide financing, you have to help us to help you. So in going to the bank for a loan, you have to ensure that you are bank ready. So we have spoken about what is it that you need. We're going to be looking at you as an individual when you're given a loan. We're looking at your credit history on the personal side and on the business side. We're looking at your financials. And audited financials is not a requirement up to a certain amount. But at the end of the day, when you come to us, remember, it's your money that we're lending. So we have to conduct our due diligence to ensure that at the end of the day, we'll be able to recover the funds that we have loaned to you. So what Scotiabank has been doing is trying to help our customers in capacity building. We're doing workshops where your record keeping, how is it that you're keeping records? Do you keep it in your head? Do you write it in a notebook? Do you do a spreadsheet? So at the end of the day, if you come to us, we're going to do our assessment, and you have to help us by preparing so that we can help you. At the end of the day, we're into the business of lending. It doesn't make any sense we have the money and we're not making any returns on it. So coming to us and we just turning your way just like that, that's not the case. We have to do the assessment to ensure that at the end of the day, we're able to recover the funds. So you have to help us to help you.
Good morning. Yeah, let me just quickly wrap. Just want to wrap a little bit.
One more question. Yes, go ahead.
We all want to build Jamaica. We all want to export because it sounds rather sexy. I'm an exporter. But then there's a side to it. One of the weaknesses we have is that we want to do big things with too small a capacity. And when somebody calls and they say, look here, I need 1,000 items, and they have a timeline for delivery, We either don't have the human skill sets or we don't have the infrastructure, superstructure set so as to allow us to be able to fulfill that request. And there is a challenge. Now, if the banks and the other institutions, whether it be SDC, JBDC, JAMPRO, you name them, have the interest of the economy at heart, then there is a need for the banks and other institutions to move away from the traditional book way of doing things. What I mean by that? One of the first things is that most of our banks do not have, and our bankers do not have the requisite knowledge and skill set, neither experiential knowledge to guide SMEs or any business for that matter. Because many persons who sit behind the desk have never owned a business for themselves. So they do not understand the day-to-day pain points of businesses. What does it mean here? It means what we need to do is to now get persons who I want to call them, and I write it down here, SME relationship managers. And these managers will be good for them to get into all these businesses and do what I want to call a furlough. A furlough allows them to spend some time in some of these organizations, these businesses, and get a hands-on experiential knowledge, become a participant, an active participant in these companies so that they are better able to understand and to guide them with technical support when they come into the bank for loan, which means then they will now tailor loans according to SMEs because it's not a one-size-fits-all. That's one thing. And then I also wrote down tailored financial products according to where that particular SME is. So that's something that I think the bank, I don't want to just complain about things. I want to posit some solutions at the same time. And I also said short-term, smaller loans. And I said to Miss Falconer here earlier, when you go to the bank and you say to the bank, I need $10 million, the bank checks your accounting, they check everything, and they say, oh, we can't give you the loan because your payment is going to be $60,000, $100,000, $500,000, $50,000 a month. But they don't say, okay, we can lend you not the $10 million because they can't pay $500,000, but we are offering you $3 million to allow you to pay $30,000 a month. Right? I don't get it tailored that way. The other thing I want to say is the whole matter of transparency. Because I think the banks sometimes are less than transparent in how they treat it matters. And you can correct me if I'm wrong. So you go to the bank and there's things people talk about the fine print. And then you talk to the loans manager and the loans office and they go through a number of things with you. And somewhere down the line, when you would have brought in all the things you were told to bring in, you're suddenly told, you know, you forgot to do this because X. And when you read and read and read, you just didn't see that in the fine print because most of the prints are large.
All right, thank you for that. Excellent, excellent points. And I can assure you that at JAMPRO, we are taking copious notes of the discussion so that we can advocate and to see how we can execute some of the very solutions that you have presented. So thank you for that. I think this is a good segue. And at this stage, I just want to thank our three presenters from the Bank of Nova Scotia, First Global Bank, NCB. Thank you so much for your presentations and to really outlining your various financial product solutions for our exporting community and wider business community. So thank you so much. I think this is a good segue to our final module for today, which is going to be looking at alternative options for exporting. So we heard a lot of concerns about the traditional banking options. We heard the challenges in terms of accessing some of these facilities. So this module is going to be presenting some other options, some innovative options that you can look at as an existing exporter and a potential exporter to finance your business. So I'm going to invite Mrs. Lisa Bell, who is going to moderate this panel, and the panelists just to come forward. And I'm going to ask my team if they could just rearrange the panel. Jean?
While they move to set up for the moderators, where's the gentleman with cannabis? He left? I just want to explain something to you, because I'm not sure you understand what the issue is. So the bankers were right. They don't touch cannabis. But there's a reason why they don't touch cannabis. In the United States and in many other countries, which would be our primary market for exporting, federal laws still consider cannabis to be an illegal drug. And therefore, any bank that does business with cannabis is technically dealing with an illegal drug. The Jamaican banks cannot step forward because it will jeopardize their corresponding banking relationship. I just want to explain to you what the reason is. It's not that they just don't want to do it. You want me to come down? It's not that they just don't want to do it. There are some structural issues within the banking system that prevents a Jamaican bank from offering financing for cannabis. And it happens globally. Quickly.
Germany has changed.
Sorry, let me just answer you. It doesn't matter. If NCB has a corresponding banking relationship with an American bank, even though that you are exporting to Canada, it will affect their relationship with that American bank. So just because you are exporting to Germany does not allow them to do it because they have a corresponding banking relationship with a US bank. That's the reason.
Okay. My last thing will be to say is that exporting has happened already in Jamaica. It has happened, and it's on a case-by-case specialist situation. But when it comes to a blanket open up to everybody, it's ambiguous. Is the best way to put it.
It is, but it is a complex issue. It is not that the banks just don't want to give money. It is a complex issue and it requires a lot of policy. The other question, great comments from that gentleman over there. There are issues, but I don't want you to beat up the commercial banks too much because there are different sectors in the financial ecosystem. Commercial banks take a certain degree of risk, and sometimes SMEs create a higher risk profile and they're willing to accept. And because my friend from Scotiabank says that she's protecting your money, there are depositors who don't want high risk loans on the books. So there is a reason. There is also the development banks. The development banks take a higher level of risk because they're development. And that's why it is important that DBJ and Exim remain strong because they can take a higher level of risk than the commercial banking sector. And then now we get to the alternative financing solutions, where you're looking at capital, creative financial products, which we're about to hear of, because all of them are accessible to SMEs, but in different ways. And it is important that you understand where you need to go based on what you need. The other issue, last issue, become panelists. The other issue I need to understand is that it's not just the banking system. As I said in the beginning, some of it really relies on you to be ready. Because if you're not ready, they're not going to lend you the money. And therefore, there needs to be a solution that helps you to be ready. So that when you walk into the bank, you walk confidently in and get that loan. So it is actually a three-pronged solution. One, help the SMEs to be stronger so that they can access financing. The commercial banks need to create more products that are SME friendly and address the issues of SMEs. And the development financing institutions who are going to take risks in things like agriculture, in new products, with startup, they can be strengthened to provide that assistance. It's not a single solution. It has to be the entire ecosystem working together to strengthen the ability of SMEs. Two, access financing, and as that man said, to grow the economy for our grandchildren. All right, that being said, we're moving to alternative financing, and I have three esteemed panelists with me, and I'm going to introduce them quickly, and we're going to watch a quick video about what they do. First, to my far left, Mr. Rajiv Ebanks. He's the CEO of Carbine Capital Investments Limited. Mr. Ebanks is a certified project management professional with over 16 years of experience, even though he look young, in multilateral development, banking and economics. He previously served as manager group project management office with the Sagicor Group, as well as he worked with the Inter-American Development Bank in Jamaica. In 2016, he co-founded Carbine Capital Investments Limited and has led a team dedicated to revolutionizing financial solutions for MSMEs, focusing on non-traditional factoring, and you're going to hear what that means, and reverse factoring products to empower small businesses across Jamaica and the Caribbean. Since Carbine's inception, Carbine has supported companies in agriculture, Mr. Gentleman from agriculture, tourism, construction, manufacturing, mining, and quarrying, enabling them to scale up, offering innovative financial solutions that bridge liquidity gaps. So let's just see a quick video on Carbine.
Meet Eric. Eric has been in farming for at least 2 decades and supplied mostly to Coronation Market, small hotels, and restaurants. He had about 3 acres of land in St. Thomas and about 6 seasonal workers. He planted and reaped some of the best watermelons, onions, and cucumbers. Eric wanted to grow his business but needed new markets. The market opportunity he saw locally was the large hotels on the North Coast. Eric was successful in receiving a 6-month contract for the supply of fresh produce to one of the larger hotel chains. He was excited and, yes, optimistic about this new opportunity to grow his farming business. The contract meant that Eric could lease more land to expand his farm, get more money for his family, and employ more workers. Like most business owners, Eric used his savings to invest more in his business, plus money from family and friends. For 3 months, Eric worked tirelessly to bring the produce to harvest stage and was proud when he made his first delivery to this large hotel chain. What Eric did not quite plan for was the credit terms of the contract. Eric would have to wait an additional 45 days before he received payment from his new market. Additionally, this market required deliveries every week under this 6-month contract. These products supplied to the hotel became Eric's receivables. Eric's costs increased as a result of his growth into a new market. He saw an increase in labor costs on his farm, he saw an increase in transportation costs, an increase in his water bill, and finally an increase in the cost of raw materials. Eric had the emblematic working capital problem. The solution was costly and often did not exist because of the appetite of the commercial banks and lending agencies. Credit cards had little to no use in the fields, and long-term loans were a no-no, especially with the qualification requirements and loan covenants. Then, Eric heard about a non-traditional financing product called factoring being offered in the Jamaican market by Carbine. As a result of factor financing, Eric no longer would have to wait 45 days to receive cash. He could now assign his invoices to Carbine to access much-needed cash. He was able to diversify his product offering and go after new markets. He was able to retain workers and keep morale high, as meeting payroll was no longer a challenge. He was able to ensure his family could have a decent standard of living. And finally, he was able to support the country in reducing its import bill. Eric continues to work hard to this day. He is now seeking export opportunities. He also does not have to worry about the payment terms being requested by the overseas buyers, as he will be able to benefit from international factoring opportunities. Some of the benefits that Eric also had for accessing factoring versus a loan include: 1. Factoring provides unlimited funding potential once you have the invoices and contract to support your demand. A traditional loan is typically capped by your traditional lending institution. 2. Factoring provides fast disbursement within 24 to 48 hours, while traditional bank loan approvals may take months. 3. SMEs will be approved for factoring based on the credit strength of your buyers, while traditional loan approval is based on SMEs' operational and credit history. And 4. Startups are eligible for factoring solutions, while it's very challenging for startups to obtain bank funding. Contact us at Carbine Capital Investments.
Thank you very much. Everybody take note of that. We'll come back to it. My next panelist is Gabrielle Spence. She's a Senior Manager of Investment Banking at Barita Investments Limited. Gabrielle is in this role, she leads the coordination, structuring, analysis, and execution of a wide range of transactions, including private credit, capital markets, mergers and acquisitions, financing, mezzanine financing, and both private and public equity deals. She holds both the Chartered Financial Analyst designation and Chartered Alternative Investment and Analyst designation, and has earned a Bachelor of Business. Let's hear about Barita.
130 billion or 823 million US dollars.
Wow, so there's a lot of buzz around interest rates.
Yes, the Fed and BOJ just cut rates. This should help to stimulate the economy. Businesses get ready to raise capital.
Nice. What sets the investment banking unit at Barita apart from its competitors?
Simply put, we have the best and most knowledgeable team members that have the ability to structure the simplest to the most complex transactions.
Can you share a success story?
All of our transactions are success stories. Once it is our clients are getting the well-needed capital to grow their business, and they're getting the best and sound strategic advice from Barita.
Awesome. So where are you going now?
To our client meeting. That's how it is that we build trust with our clients, by getting to know them.
I love that. You go, girl. Bye.
All right, that's Barita. So we're switching from two lending institutions, technically, and I know they have investment products also, but also now to the Jamaica Stock Exchange, which is also a very viable way for small businesses to raise capital needed for growth and development. So I'm joined by Mr. Andre Gooden, who is the Manager, Group Business Development at the Jamaica Stock Exchange. Mr. Andre Gooden has been at the Stock Exchange, and he brings over 30 years of experience in the areas of portfolio management, investment counseling, financial planning, commercial banking, stockbroking, and project management. He has held several senior financial positions within the financial sector in Jamaica and New York in the area of banking and investment. Mr. Gooden holds a Bachelor of Science degree in marketing from the State University of New York and an MBA from the University of New Orleans. He also holds several, and I know this, director positions, including at the Jamaica Chamber of Commerce. Let's hear about what the Jamaica Stock Exchange does.
Jamaica Stock Exchange, the JSE, is an efficient electronic market through which buyers and sellers of securities in public listed companies can trade their shares. What is a stock exchange? A stock exchange is an organized marketplace where stocks, shares, and sometimes bonds are traded by members of the exchange. Shares represent a unit of equity ownership by the holder of that unit in the company. The shareholder partakes in the profit and losses of the company. The stock market has evolved since its inception in Europe in the 12th century, and in many developed markets is the preferred option for raising capital. How does the Jamaica Stock Exchange operate? The Jamaica Stock Exchange is a privately owned, limited liability company with the mission to provide a fair, ethical, efficient, and transparent stock exchange in Jamaica. We began operations on February 3, 1969. Prior to this, we operated as the Kingston Stock Market, which was established in 1961 with the assistance of the Bank of Jamaica and other institutions. The Jamaica Stock Exchange is governed by a board of directors consisting of 5 independent directors and 11 broker members. A chairman and deputy chairman are elected annually, and the general manager is charged with daily operations. Brokerage houses or brokers trade stocks by bringing buyers and sellers together to complete a trade. The Jamaica Stock Exchange ensures that the stock market operates at the highest standard, provides facilities for the transaction of stock trades, conducts research and disseminates information, enforces rules that ensure public confidence in the stock market. The Council shapes the strategic direction of the company, approves and ensures that rules of the exchange are not violated. The monitoring of market activities resides with the management of the stock exchange. The Jamaica Stock Exchange, as a self-regulatory organization, is overseen by the Financial Services Commission, which is a government-regulated body with responsibility of supervising the industry. What types of securities are traded on the Jamaica Stock Exchange? Over 40 companies spanning the industries of banking, financial and insurance services, manufacturing, trading, tourism, and communications are listed on the Jamaica Stock Exchange. These companies offer ordinary shares and, to a lesser extent, preferred shares. An ordinary share is a unit of ownership in a company. The more shares you have, the more of the company you own, and the larger the proportion of the profits or dividends you should receive. Shareholders have important rights, including the right to vote at meetings of shareholders and the right to receive dividends if they are declared. A preferred share is a special type of share that has first draw on the profits, and in many instances at a set percentage rate. They are normally more costly than ordinary shares, but they do not have ordinary voting rights. The Jamaica Stock Exchange operates within international best practices. We have implemented a computerized trading system. We operate according to the T+3 standard, meaning that buyers receive their stocks within 3 days of trade. Likewise, sellers receive their money within that time. Our subsidiary, the Jamaica Central Security Depository, the JCSD, enables the trading and settlement process to be fully automated. Share certificates do not physically change hands. Each participant in a trade must have an account at the JCSD, and the account will be reduced or increased immediately as a trade is made. By issuing monthly statements, we confirm the trading activities that affected each investor's accounts. JCSD customers can also download their statements from the JSE's website, www.jse.com.jm. Though investing in equities can bring high rewards, there are also risks involved because the values of shares go up and down and returns are not guaranteed. Share values depend on the performance of a company, the value investors place on owning a company's shares, and on economic conditions. The Jamaica Stock Exchange does not insure against that form of risk, but we help to regulate companies by ensuring that they operate according to the rules of the exchange, which provides for proper disclosure of the company's operations. How do you invest in companies listed on the Jamaica Stock Exchange? To purchase shares through the stock exchange, you must engage the services of a broker. Here are guidelines that you may follow when investing. Make a conscious decision to invest for the medium to long term. Seek professional advice from a broker who is trained to identify the earning potential of companies. Collect and study as much information as possible about the company in which you intend to invest. After buying shares, monitor and track your investments. The Jamaica Stock Exchange assists investors to monitor their investments by publishing a daily report that includes the Jamaica Stock Exchange indices. An index is a weighted average of a selection of stocks. The Jamaica Stock Exchange has 3 indices and reports on the market performance of each company. The JSE Index, which comprises all listed companies. The JSE All Jamaican Composite Index, which measures the performance of Jamaican companies. The Jamaica Select Index, which comprises the 50 most frequently traded stocks. How do you benefit from the Jamaica Stock Exchange? The Jamaica Stock Exchange is a vital link between companies needing capital and people with money to invest.
All right, thank you. I hope you all are paying attention. That's a lot of information, albeit, but I'm sure JAMPRO will provide these videos to you all. But let me ask you a question before I get into the panel discussion. How many people are intimidated by the financial language? Securities, moratorium. No, seriously, if you are, raise your hands, because it gets overwhelming when a business does not understand the language of lending. Everybody understand them? So 1, 2, 3. All right. And for that reason, guys, we're gonna have an interactive session. Try and make it as simple as possible. And I do appreciate that first presentation, because when I say factoring, you are probably like, what does that mean? That sounds like a mathematical term. It really isn't. It is a loan term. But just to put it into context, we spoke, there are different types of financing. There is debt, there is equity, and there's quasi-equity. Largely the 3 classes of money you can get. We just spoke about debt with the commercial banks for the most part. Andre is going to speak about largely equity and quasi-equity. And over here, it's kind of going to be a blend of the both, right? And I want you to keep that straight in your minds, because each class of funding carries different terms, different risks, and different complexities. Okay? So I'm going to start over to my left with Rajiv. And Rajiv, I thought your presentation was very powerful, because we heard in the room earlier that a number of our participants are producing. They're producing. And they have contracts, and they want the contracts, but they can't get a loan in order to expand the factory to come out of the kitchen, right? Is the kitchen you say you're operating from? How does factoring, or receivables financing, I should say, how does that work? Explain in a very practical way how that would help the people in this room, and any other products that you may have that you think may be beneficial to them.
Sure, thanks, Lisa. Afternoon again, everyone. Really appreciate you being here. Big thanks to JAMPRO for organizing the session. Now, Caribbean factoring. We really started in 2016, so you can almost call us new kids on the block. I can say that Jamaica's financial ecosystem has really been evolving over the past decade. And today I can actually say, give some thanks to the commercial banks, because they've invested heavily in the technology that supports the efficiencies of Caribbean. Now, factoring. Let me give you, based on this true story that was presented as a cartoon. Eric, a real farmer operating in what were called Jamaica's agro-parks, got large contracts to supply into the hotels. Now, farmers are very resourceful persons. They use their own savings, loans from friends and family to plant and grow these crops. The problem is they're more used to maybe the coronation market, where as you deliver, you get paid. Now they went into one of the large foreign direct investors hotels, who told them they had to wait 45 days before they got paid. That's after 3 months of putting in their own capital and being told that they have to wait an additional month and a half before they saw the first dollar. What factoring does or did for this small farmer was that it allowed us to do an assignment on his receivable. That receivable...
Well, tell them what assignment means.
Oh, assignment means we've taken an interest. We've registered our interest through, well, I mentioned Jamaica's financial ecosystem is evolving. So we used what's called the NSIP portal to register our interest in that receivable. That means that any payment originating from that invoice would then be routed to Carbine, who is the factor in this situation. So instead of Eric having to wait 45 days to get paid after putting in all his capital in the production of the crops for 3 months, he got paid once that invoice was approved. How this works in an export context? In our portfolio, we have persons going into some of the largest multinational organizations in America. For instance, at Target. Target credit terms are about 60 days on a good cycle. 60 days waiting for payment could cripple most businesses, practically every small business. Because for 60 days, that's maybe 2 months of payroll, 2 months of electricity. These bills are not waiting, right? So we purchase those invoices and basically give you the capital to keep going. What we realize is that once we deploy capital into these supply chains, these small businesses end up scaling quite quickly. For instance, Eric, he's now getting cash flows in real time. He's able to increase, as the video said, the amount of workers, the amount of supplies going into his markets, because as soon as he delivers, he's getting money. And these are good markets. And a lot of times, in a lot of instances, these good markets tell you you have to wait to get paid. I heard someone speak about purchasing equipment. We don't finance equipment purchases. But for instance, we had, let's call him a Mr. Clarendon, who supplied aggregates into the expansion of the Maypen to Williamsfield Highway. When we looked on his financials, he had over 200 million in invoices pending payment. That capital, that's what we look on as collateral, that invoice. Those invoices, that's what factoring sees as your collateral. So we converted a portion of those receivables into cash flow for that business, and he was able to purchase the equipment needed to scale up his supply into the expansion of the highway project. So we started in agriculture. We started with a small farmer. So right away, you know that audited financial statements, they weren't readily available for a small farmer. So that's not a mandatory requirement for Carbine. It helps in our due diligence. It helps you even benefit from a more favorable discount, what we call a discount rate, because we discount the invoices. That's how we make our margins. But it's not mandatory. So as a small business, what I can say to you as Carbine, you have an invoice, that's an asset. We will take that asset and convert it into immediate cash flow to scale your business. Now, let's say you're a well-established client at Carbine, and overnight, your cash-flow purchase order doubles, right? You're probably used to a much smaller purchase order. That's a capital you can manage. But you have an established relationship with Carbine. We've been getting payments from your supply chain as per the agreed credit terms. We can also look at purchase order financing. This is for existing clients who have a good reputation with Carbine. We will cover up to a maximum of 50% that purchase order. So that basically deploys the capital to you to purchase the increased raw materials that you need and scale up your production to meet the demands of the overseas market. I've seen Castrol on the shelves in the Walmarts, in the Targets. Overseas, it's expensive. There's huge market opportunity for that. So, yeah, that's what we're here to present today, factoring. So we're happy to go through, detail even more what the onboarding requirements are. I'll say in Jamaica, it's very easy to register a business. I think Jamaica's ease of registering a business somewhere up in the top segment. So have a formally registered business. It's important that you keep proper records. We need to establish that relationship, that supply chain relationship exists. So it's good that you have a contract, a purchase order from your overseas market. It's excellent if you can show where you've invoiced and they have paid into your bank account. So we need to track from purchase order contract to you delivering to payment coming in. All of those criteria go into our assessment. As the team was saying earlier, we know no client is the same. It's even worse, no supply chain is the same. The credit terms vary. The order quantities vary widely, right? Oh, another point. Oh, go ahead. Sorry.
Sorry, because I'm...
This one?
Yeah, no, there we go, it's back. Hold it, because I need to get all three in. So just hold it and the questions. Just to mention, NSIP. Everybody knows what NSIP is? NSIP is a registry created, it's an evolution that came about a couple of years ago that allows companies to register non-real estate movable assets as security. So you can take equipment and use it as collateral. Not all institutions will take all types of collateral, all types of equipment, but you can use equipment as collateral, and what protects the bank is this registry called NSIP. Okay? Just remember that. All right, let me shift gears to Burrito. Burrito, your video never tell me what you do really, right? But I want you to be in a very succinct manner to tell us what are the products that you offer other than loan financing, because I assume you do loan, but that would be our innovative that would help the people sitting in front of you.
Thank you so much, Lisa. Good afternoon, everyone. I'm happy that you asked me this because the video did kind of cut it off. Sorry, you hearing me? Okay, great. All right, so afternoon again, everyone. My name is Gabrielle Spence. I'm here from Barita Investments Limited. Just to give you a bit more about Barita. Barita is one of Jamaica's oldest stock brokerage firms. It was established in 1977 by trailblazer Mrs. Rita Humphreys Lewin, and in 2018, majority shares were acquired by Cornerstone. Now, since the acquisition, Barita has really grown into a full-service investment bank, stock brokerage firm, and asset management firm that manages over 405 billion Jamaican dollars. And we have our footprints in Kingston, Mandeville, and Montego Bay. Now, the investment banking division, which is who I am representing, what is it that we do? So in investment banking, simply put, we structure and arrange financial solutions for our clients, and we provide strategic advice to our clients. Now, our investment banking unit, it was launched in December 2018, so we are also a newer kid on the block when it comes on to investment banking. However, since launching, we have raised, as the video said, we have raised over 130 billion Jamaican dollars for Jamaican businesses, and this was done to, to drive the growth of these various Jamaican enterprises. Now, our motto at Barita is to make your money work for you. So how do we do that? Through investment banking, our motto or our mandate is really to drive national development and democratize wealth. And how do we do that? By structuring these opportunities, and I'm going to get into structuring because that's one of the main selling points. Structuring the opportunities, unlocking the capital, and what this does is support businesses just like yourselves to reach their full potential.
Okay, Gabrielle, tell me what exactly structuring means. That don't mean anything to this lady who is producing from her backyard. What does structuring mean? What do you mean? What do you mean by you're going to structure the capital?
All right, so what we're discussing is non-traditional financing, right? And as you rightfully said at the beginning, that involves a whole myriad of things. But we're going to break it down into two main components and then go from there. So first thing we have is debt. Now, debt can take various forms. You're familiar with the traditional financing, the loans from the banks. We also tap into the capital market space, and we arrange bond facilities. This can be a private bond or a public bond. Now, what bonds allow you to do, or what we do with bonds in the capital market space, we bridge the gap between persons who have the capital and between persons who need the capital. So by arranging a bond facility, it invites investors, and this can be institutional investors, so pension funds, you have various asset managers, insurance agencies that are looking for these opportunities to invest. And of course, a pension fund, if you go to a pension, you can't even go to a pension fund, really. So what it is that we do, we connect the suppliers of capital with the persons that need capital. So,
Gabriel, you're trying to tell me that the companies in here, which are largely small and medium, could raise a bond?
That's correct. We arrange financing.
Okay.
Via bonds. So I spoke about the bonds. We also do factoring, just like my colleague here. We assign receivables. We also take it a step further. We actually purchase receivables. So let's say, for example, you have a contract maybe with the government with some notorious or some qualified supplier. Let's say you have a contract with them and you've gone through the process, but you need back your capital. What we do, we can actually assess it. We have to do our due diligence, of course, assess it, and we can outright purchase the receivables from you. So what that means is when the contract is being paid within the stipulated time frame, that those funds would come directly to us. And you would have received your funds from earlier when we would have structured the transaction.
Rajiv, what percent of the contract you do?
The invoice, we go up to 80% the value.
And Barita, how much do you do?
So, good question, Lisa. Each transaction is different, but what I would say, we also go up to between 80 to 85% of the contract.
All right, so there you have it. For those people who need receivables financing or factoring, there are two institutions, and that's an alternative form. Are there any others you want to speak before I switch over to equity?
Yes, thank you so much. So we went through the loan financing, we went through the bond financing, we went through the various receivables financing. We also partner with the DBJ. So the DBJ, we're one of the approved financial institutions. So we partner a lot with the DBJ. The DBJ, as Travel mentioned, they also offer guarantees. So there's a credit enhancement fund that we do utilize for our clients as well to help to support the financing that we're raising for you. So that's it on the debt side. Now on the equity side, it can get a bit more complex. However, let's break it down. So we have public equity, and we have private equity. Let's start with public equity. So Mr. Gooden here had the very good presentation about the Jamaica Stock Exchange. Any members in here have aspirations of listing on the Jamaica Stock Exchange? Great.
Everybody's hand should be up. And after the presentation on the Junior Stock Exchange, everybody's hand should be up.
Exactly. So I know Mr. Gooden will get to it, but there are very good incentives to list on the Jamaica Stock Exchange. So what it is we do at Barita, we take you through the process. It's not just get up today and list tomorrow. No, we have to ensure that you're ready to list. And what does that involve? You have to ensure that your financials are in order. You have to ensure that the company is in good standing. You have to have your governance in place, the board of directors, and all of that. So that's still an aspiration. However, let's say you're not ready for listing yet, and you're not necessarily able to get debt. We also have private equity. Now, what is private equity? The opposite of public equity. So we arrange financing to actually take a stake in your business after doing our due diligence. So once we do our risk assessment and we say, all right, we want to take a bet on you because we believe in what you've shown us. We believe that we can extract some value out of this as well. I want to take a stake in your business. So we do a valuation, we come to an agreement, and we take a private equity stake. So we become your strategic partner until you are ready to list?
Let me ask you a question about that, because many, and I would dare say, if I'm speaking on behalf of some of the companies in the room, they own 100% of their company, right? And they don't really want to give you any because they're afraid you're going to take it away from them, right? And what protections are put in place such that that cannot happen? Because that is a major impediment for raising private equity.
That's perfectly understandable, and it's a valid concern, right? So with private equity, what really protects you? So private equity, it's risky, right? It's riskier than there's no collateral, there's nothing to fall back on, right? So it is a risk that we have to take on, and we're aware that we're taking it on. With private equity, what it is that we do, other persons are different. We are not interested in taking a majority stake, majority rules, right? So you, at the end of the day, will always hold up to between 80 to 90% of your company, while we take a minority stake in your company, so between 10 and 15%. So what that means, just to sum it up, if you have a majority stake in your company, you are the majority shareholder. We have no route of taking, we can't take your company away from you as a 10% shareholder, as a minority shareholder. So once you hold over 51% of the shares, you're the majority shareholder. So you will essentially control your business. And also, just to add to that, Lisa, we're a financial institution, right? What we know is how to make money. We don't know how to do agro-business per se. We can't come into your business and say, this is how you must operate the machine. This is the customer that you should know. We have no interest in that. As a strategic partner, we trust that you can play your part to deliver value for yourself and for us.
All right, thank you very much, Gabriel, and I want you to hold your questions because there are going to be lots of them. I'm switching gears to equity. Oh, sorry, he has a mic.
Check.
Andre, please tell them, I'm going to start with a question about the Junior Stock Exchange, because I think many of the entities, if I've gauged the room right, would not be able to go directly to the stock exchange. But to focus in on the Junior Stock Exchange, and what I understand is going to be a micro stock exchange, if you could just focus your comments in those areas.
Just to correct, thank you, Lisa. Just to correct the terminology, it's a Jamaica Stock Exchange Junior Market.
I'm sorry, Jamaica Stock Exchange Junior
and
Market.
the Jamaica Stock Exchange Micro Market.
Yes.
Right. The size of the overall Jamaica Stock Exchange now is 1.9 trillion Jamaican dollars, 12.7 billion US dollars. In the last 5 years, a total of $124 billion has been raised. This is the last 5 years through COVID, etc., etc., by companies like yours. 128 billion through APOs, IPOs, private placements.
Speak in English.
Initial public offer, when you come to me for the first time with your company to raise capital, that's an IPO. An additional public offer is when you issue some additional shares to the public. Private placement, when the capital is raised and listed on the market, basically. Barita has been very active in this space and others. So, on the junior market now, we have 48 companies currently listed on the junior market of various sizes, various sectors, manufacturing, financial services, everything. We have a wide variety of companies listed who all started just like how you are now. Persons in here are very concerned about lack of collateral for their back their loans. That is not much of an issue when you raise capital on the market. Patient capital. Capital is more long-term. The question about control, you only have to give up a minimum of 20% of your equity in the company, of your shares, in exchange for cash in your business. So you won't lose control. You won't lose control. That is very significant. in order to get these benefits, in order to raise capital on the stock market, Gabby mentioned some of the things. You have to have a proper governance structure in place. You have to have accounts. Proper financial records have to be kept. Remember now, it's not the bank money you're borrowing, it's people money. It's investors' money. Every quarter, you have to supply a financial report which says, this is how I've done in this quarter, this is the sales, this is the receivables, this is the net profit, this is the balance sheet, etc. So that the investing public, who are your shareholders, will get an idea of how their investment is doing and what the prospects for the future look like. Governance now. You have to have a board of directors. You have to have independent directors as well. So you, your wife, and your child can be on the board, but you also have to have some independent directors, not directly connected to the business, who will chair your audit committee, which is responsible for producing your financial results and maintaining the quality, and your compensation committee. These two committees are important because it shows how the company is being managed internally, and it gives the investor the confidence. Now, in exchange for all of this, on the junior market, the first 5 years of your income earned is not taxed. So income tax disappears for the first 5 years when you list on the junior market. The second 5 years, whatever the income tax rate is, you only pay 50% of that. When you graduate now, in year 11, you then become a full normal income taxpayer. So the cash that you'd be spending, paying over to government in the first 10 years of your business is plowed back into the business, reinvested into the business. In return for all of that now, your responsibility is to run the business effectively, make good strategic decisions that will result in the company growing and the share price moving up and the shareholders happy. These junior market companies have the benefit also of what is called a mentor. A mentor is that person who has a checklist of things that you are supposed to be doing, when your taxes must be filed, when the results must be published, etc., 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 to make sure that you remain compliant with all of the requirements to remain listed and compliant on the Jamaica Stock Exchange. A mentor can be a director, but it doesn't have to be. If you have somebody in your space who gives you advice already, who has the competence and who you feel comfortable with, you can nominate that person as your mentor. They can apply to the stock exchange, and if approved, they can be appointed to your board as a mentor. But we also have a list on the stock exchange website of mentors who you can contact directly as you organize your company to be listed. So the important thing to note is that when you're listed and you raise the capital, that is just the first step. The next step is, how do you deploy the capital? You buy machinery and equipment? Do you go into a different product line? Do you buy real estate, larger factory space, etc., etc., etc.? Those are other considerations as well that can affect how your company performs. But any small business like the ones here, medium businesses, anybody can organize themselves and become listed on the Jamaica Stock Exchange and reap great rewards. I mean, you can know some of the companies out there you know already. Junior market listed companies that have risen from nowhere into becoming huge conglomerates now. Lasco is one, Fast Rich, Derrimon Trading, etc., etc., etc. All these companies started as small operations, and using the benefit of equity capital, they have managed to scale their businesses, grow their market, and diversify their products. It's not impossible for any company in this room to be listed. The other thing I'd mention, which Lisa touched on, is the Jamaica Stock Exchange micro market. What's the difference? The junior market is for companies looking to raise between 50 million and no longer 500, 750 million. You want that kind of capital, you go to the junior market. If you want more capital than that, you go to the main market. The micro market, in March when the minister spoke, she announced after 6 or 7 years of us knocking on the door that we've been approved to create a micro market. A micro market criteria would be companies that are looking to raise between 5 million and 49 million. That's below 50. So a lot of you in this room could fit into that category as well. The steering committee has been formed, of which I'm a member, and subcommittees have also been formed, and we have started to meet. Our target is to list the first vehicle, the first company on the micro market in 2026. It's a tall order, but we are challenged and we're going to go at it. Our committee comprises everybody: DBJ, Jamaica Securities Dealers Association, Small Business Association, Ministry of Investments and Commerce, everybody who has a stake in formalizing this product and service will be at the table. I just left a meeting and came here, and I tell you the progress is, the energy is high, and just like how the junior market revolutionized how capital is raised in this country, so will the micro market, because the micro sector is equally important and probably equal in size to the medium sector already. The amount of companies that have been listed, as I told you already, since inception is 55. We now have 48. Some have graduated and some have been, one or two have been delisted. They've employed people, so they've now paid PAY and NHT, which the government benefit from. They buy goods and services, so they pay GCT at a higher rate, etc., etc., etc. So that is revenue the government never had before. Those are employment that never existed before. So it really has assisted the growth of the economy without question. The micro market will do the same exact thing. We're still working out exactly what the structure and the product would look like, because it might not be one company worth $10 million listed on the market. It might be a bunch put together and listed as a special purpose vehicle, which my learned colleagues can tell you more about. But the point is, the opportunity exists. I hear you bawling about interest rates, and you're bawling about collateral, and banks not being able to assist you as much as you want. The way to get there is to raise long-term capital through equity. The last thing I would mention, Lisa, is green bonds. The Jamaica Stock Exchange is a member of the United Nations Sustainable Exchanges. One of our responsibilities under that is not just social order, which is another subject, because we have another organization called the Jamaica Social Stock Exchange, which we'll talk about at another time, Fergie, is green bonds. Green bonds are global instruments that you use to raise capital to deal with environmental projects. Wastewater management, recycling, big one in Jamaica, renewable energy.
Resilience, hurricane resilience, that kind of thing.
Resilience, and exactly anything to do with, to mitigate the risks of climate change. What will be happening is that if you have a project, you have a small factory that is inefficient now because of how it is operating, and you can't scale better, you need to go solar. You have your waste being deposited into the sea or whatever it is, and you need to just improve the quality of the efficiency and the cleanliness of your business. You can raise capital through a green bond on the Jamaica Stock Exchange platform. That will happen later this year. The opportunity exists to scale your business, not only through equity financing to grow the business, but also efficiency by investing in green. And there, I can tell you, the market in the world now, there are some investors institutional and individual who only invest their money in green projects. Now, green projects are what I just told you about. So they look around the world for projects that are protecting the environment or improving the environment, and they invest in it. There's a lot of money out there looking for homes to invest in green. So that's another product and service coming to Jamaica Stock Exchange shortly. But as is the micro market next year. But the junior market is here. We also have an e-campus which provides training, capacity building on any subject under the earth have to do with business. How to read financial statements, how to govern your business, corporate governance, securities trading if you want to get into that, data privacy, IT. We have a curriculum of courses at the Jamaica Stock Exchange e-campus to help you to learn about the things that are happening globally to help you to scale your own business.
Thank you, Andre. That was a lot, but I'm encouraging you all to particularly go to the e-campus so it will provide some of the information that you may need as you take your journey to access whatever kinds of financing are available, whether it's equity, investment, quasi-equity, factoring, or just loans. There is information out there, and that is why this initiative is so good, and I applaud JAMPRO again for having it.
One more thing, Lisa, very quickly.
Wait, let me answer a question. If you were to tell the people in front of you how to prepare themselves to be listed on the micro exchange, what would you tell them?
It's the same, but I would also mention quickly, Lisa, that when you're listed on the Jamaica Stock Exchange, your bankers look at you differently because you're now a properly governed institution with regular financial statements. You go to them for a loan, the loan rate just drops off because you're a lower risk. You're more organized, and you're governed on a recognized exchange. So the risk of your business is perceived to be less. So you get banks that weren't able to facilitate you will come knocking at your door, trust me. As it relates to the micro, the same principle. You have to have a proper governance structure in place, which DBJ, JBDC, and Jamaica Stock Exchange e-campus and others will be helping you with building capacity in the business. You have to have an organized structure. You have to have a system that can produce proper financial records. All of that, those are prerequisites to list on any exchange. It's a prerequisites to go to the commercial banks and borrow. There's help that you can have along the way. You don't need a 90-page business plan necessarily to list on the micro market, but there will be some fundamentals that we'll have to look at as we structure the product, which will require some information from you. Transparency. You have to be transparent. If you lose a big contract or you get a big contract, you have to inform. That must be part of your reporting, because that affects your shares and it affects how your investors perceive you one way or the other. So be transparent, have clean reporting, and have a proper governance structure in place. And we have facilities in place to assist you with those. You don't have to do it by yourself.
Thank you. That's good information. Is the DBJ rep still here? The DBJ rep is here? Because one of the questions I would love JAMPRO to ask is if DBJ would provide technical assistance in addition to what the stock exchange provides to help companies if they want to go onto the micro, if they need assistance in getting those structures in place on a one-to-one basis.
We're actually in touch now with the IDB Invest particularly.
Right. Oh, she was here too.
Who are assisting with putting forward a proposal to get some funding. Could be grant funding, we're not sure yet. More than likely grant funding to assist organizations in developing their capacity.
Great. Everybody got that? Great news. These are alternative sources of financing other than the commercial banks and are equally important. That does not mean that you cannot have a combination of financing. You could get some debt, you could build go public and create some stability in your organization. But you may need a working capital loan from the commercial bank, or you may want to go and do a factoring deal, one-off factoring deal because of the size of a contract that you may have. it does not require, it's not necessarily a straight line approach. Financing is going where it best suits your business and your best, where it's the stage your business is in. It is great that we're going to have a micro exchange, micro market. It is great because that is another evolution, and I dare say we only are one of a few countries that will have a micro. And that is very important because you go from micro to small to medium to large. And there is a step-by-step process, and there are alternative forms of financing available based on the stage you are in your development. I know I'm almost out of time, but I'm going to take a couple of questions. Sir, this gentleman had his hand up first. Come, question? I'm going to ask you to be very, very succinct in your question.
Ask the question, yes.
A question, not comments. There you go.
Yes, thank you very much. John Bullock here again. This one is for, you described him as a handsome gentleman.
Carbine
Capital. I just want to get it clear. The factoring, you mentioned, I think, 80%, and Spence mentioned 80 to 85%. I just want to have it clear. Are you saying if I have a contract for $100 million, you will charge me $20 or $15 million to settle that contract?
No. Let me answer it. Let me answer it to the question. It's a percentage of the amount he will provide to you. So if it's 100 million, the maximum he will provide to you is either 80 million or 85 million.
How do you arrange the cost? Is it a percentage or a rate?
Okay.
Good question. I can say right now in our portfolio, our discount, right? That's the fee that you're interested in. It can range anywhere between 4 to about 7% of the invoice, and that's on a per 30-day cycle. So that's how much we discount. The 80% is what we'll advance, or the 85% in the case of Barita, which means when the settlement comes in from your buyer, we take our fee and disburse the difference owing to you.
What is it for Barita? What is the percentage? The fee?
What, the fee? So the fee, it ranges, right? And it ranges based on each transaction. It depends on the dependability of the purchaser. So this can range from anywhere between, I would say, 5 to 7%. However, what I want to point out to you, Mr. Bullock, and I'm happy that you asked this question, we can approach the receivables in various ways. So we can do it in the way that, let's say we do a loan facility, right? A loan facility. And you anticipate you should get your funds within 90 days, 180 days. It depends. It could be up to 365, depending on the purchaser. So let's say we do a loan and we just assign the receivables from your contract. What would happen then, you would pay the interest, and we can work out when you pay the interest. The interest, and it depends on your business. So let's say your cash flow, you need the interest every 90 days, every 180 days. We can have a discussion about that. Once the receivables come in, then it pays down the loan. We disburse your portion to you, and then we can arrange a facility where you can then draw again if you have additional receivables. So we can do it that way. I also mentioned outright purchasing the receivables. So what happens with outright purchasing receivables? Now that's a bit more risky. So purchasing receivables, we can do it two ways. We can do it with recourse and without recourse. So with recourse, what that means is, let's say your supplier doesn't pay you. You're gonna have to pay us back. Without recourse, that means if your supplier doesn't pay, we don't get any money. No, the riskier one, of course, is without recourse, and that warrants a higher discount because we're taking on additional risk by taking on this transaction. And with recourse, of course, it would be a lower discount. Now, the discount itself, I can't stand here and tell you what the discount would be. It depends on who the counterparty is. Now, if it's the government and you have a proven track record, of course, that discount would be low. So it just depends on the counterparty.
Let me just give you an answer to that, because as I said, my mind is just going a mile a minute. Trade credit insurance. So if you had a stroke, I said it to them because it's really applicable to them. Trade credit insurance. When you're looking to financiers, whether you're there or here, always look at the risk of the transaction, the risk of repayment. So I'm saying to them, they buy your receivable without recourse, as she says. In other words, she's taking the full risk that the buyer does not pay. But if she backs her transaction with trade credit insurance, she mitigates the risk.
What's the rate for the trade credit insurance? Again, remind.
It could be that you do the trade credit insurance, and when you bring it to them, their discount fee would be lower. Or it could be that they take out the trade credit insurance, and therefore you would have a higher discount fee. But what I'm saying is the problem is risk. The solution is trade credit insurance. And how the transaction is structured is best when all the risk is put on the table and is structured appropriately, which is what Barita and Carbine, I think, say that they will do for you.
Yeah,
wait, let me take another question. Quickly.
Talking about the insurance.
The trade credit insurance is usually revolving because it assumes that you're going to continuously sell to the person. It's not just a one transaction. But you can structure it EXIM. It can be for a short term or it can be for a year. Question? Clearly we need another session, but yes,
Hi.
go ahead.
Hi,
Okay.
good afternoon. Shanika Edwards, Home Choice Enterprise. We are considered a bit of a medium-sized company.
Yes,
We're
yes.
growing.
I
The
know
thing
you.
is, we are a Muslim-owned company.
Yes.
So a lot of these opportunities we can't take advantage of because
Agree.
they have an interest component to it. My question is, we're looking to develop in terms of our infrastructure where we are, we're outgrowing that location. What opportunities would be there for us to take advantage? We've had a relationship.
Factoring is not interest. Loans
to an
are, but
extent,
factoring
and
is
we've
not really
taken
interest.
advantage of what Carbine offers.
Right.
But we've had to tailor it to, limit the opportunity of interest. The discount,
Agreed,
quote unquote,
agreed.
is still a bit of interest.
Well, I see it as opportunity, maybe equity,
So we're headed there.
Right,
And
and
we
you
do
should be
have
headed there
private
based on your
equity
size.
currently.
Yes, Right.
I know. So we're looking to that, but in terms of maybe infrastructural grants or markup opportunities, what opportunities are there for us to look into?
I don't think anybody in this room can potentially answer the question because of the complexities of your particular business because it's Muslim owned. But it also is an opportunity for any one of these entities to craft a solution that can be used that does not have an interest component.
Right, so that's what we're trying to do because we have a lot of other small companies that are Muslim-owned coming up, and while we are able to, offer some guidance and support, we're also advocating for stuff like that to be available.
So Barita and Carbine, get your pencils sharpened.
Well, I just want to add something. Shanika, right? Yes, all right. So Shanika, what I would say to that, we are definitely interested in assisting you. What I would say is that we're open to structuring, we're open to tailoring whatever solution you need around your business. But what I would advise is just to come in and have that discussion and see how best we can help you. Because what you'll have to do, you'll have to educate us exactly on what it is that you can and cannot do, and we'll do our very best to structure it around you. But I definitely believe that there is a solution that we can find for you.
Okay, thank you.
Right, so
Briefly.
well, we're familiar with Home Choice. We've worked on deals to ensure we're SARIA compliant. So, and I'm seeing Home Choice products since even the private equity deal, even more stores, locally and overseas. So, excellent work. So, my only thing is, I can imagine your receivables are also increasing. So, if you'd want to convert some of those receivables again with Carbine into some cash flow, that's something we'd be very happy to look at for you. And that capital that you get from us can naturally go into whatever infrastructure or expansion works you have planned.
Okay,
All
thank
right,
you. Sounds good.
Any other questions? One quickly. Mr. Lane.
All right, afternoon. My name is O'Shane. What if I'm a business owner, I have personal debt, I owe Scotia 500,000, however, I have a business. Will it affect my business eligibility to get a loan to improve?
Is a personal debt and the debt is in your name or in the company's
It's
name?
a personal debt. The debt is not in the company's name. However, I am the owner of the company.
And you're asking it of these two institutions?
These
Or
two
generally?
institutions and generally too.
Well, I will tell you, from a commercial banking standpoint, as a small business owner, it is very likely that they ask you for what is called a personal guarantee. And they're going to look, because of your position in the business, they don't only look at the company, they look at you. They look at you personally. So they will pull your credit report, they will pull the information on you. Not to say that that debt is involved in the company, but because you are so closely tied to the company, it is likely that they will ask for that information.
Yes. What if the business is performing excellently?
Well, then it may negate it. It may negate any concerns they may have about your personal. But it certainly would be a conversation you would need to have them. Would that be the same for you, Barita and Carbine?
Yeah, O'Shane, thanks so much, Lisa. Lisa covered a whole lot of it. I just want to add something to it. So you said the debt is in your personal name, but the business is performing. What will likely happen, as Lisa said, we may ask you for a personal guarantee. And when you do a personal guarantee, you have to give us your personal financial statement, which we would essentially see what your net worth is. So your total assets minus your total liabilities. And we take into account your expenses. So that's how we kind of value what the personal guarantee is worth. Now, if the business can stand on its own, it shouldn't be an issue, but it is something that we will look at. What I would also take this opportunity to say is that, as Lisa said, we'll pull your credit report, and what the credit report would show us is how you personally have been managing your debts, because that will give us some information about how the head of the company will also manage the company's debt.
Yeah, good answer. Understand? But it doesn't always negate it. It's just that if you can give a good explanation, then the bank will consider it. Any other questions for these esteemed panelists? One quick one, because I've been told to wrap up quickly. Never mind. Mike?
I'm going to bring it over.
Come, you can come for this one.
That's okay. Hi, everybody.
Quick.
Yes, so it's mainly for Mr. Jamaica Stock Exchange. I will want to be one of your top micro persons for the thing, right? But you said that we needed governance. Is it a smaller scale governance? Because you said that we needed 20%. We needed to provide 20% of the equity to be listed on the things. I'm already losing 20%, and then if I need to have a large board, I'm going to be losing more. And as women, we are very, passionate about things that we have close to us and whatever. And I know that I need to give out some equity in order to scale. I know that perfectly fine. But giving away so much, it's a little bit,
So the question is, have you decided yet, Andre, if for the micro it will be 20%?
No, we haven't decided yet on the size for the micro or the governance structure, but there will be closer monitoring, closer mentorship, I would say, for the micro companies because they don't have the skill.
Yeah.
So
how am I going to read?
We just started the model, and when we perfect the model, you will have those details. But what I would say is that prepare yourself to be able to produce good financial records, because no matter where you go, no matter what model we end up with, we will need to have a governance structure in place where we can understand what is happening in the company, make some predictions, etc., etc. So whether or not we decide it's 25%, 10% of the equity, so one of the fundamentals is that the company has to appear to be well run,
yeah,
and well organized. So keep going in that direction. In a few months, you'll get the full details of what the other requirements are. Use the junior market requirements now as a guide, but it is not final.
Set in stone.
Right.
All right. And I also would recommend you need to start going to JBDC because governance is more than financials.
I am a part of Jamaica Business Development.
Great. Gabriel had a comment.
Yes,
quickly.
just to add to that. Sorry, I didn't get your name. Kimara. Just to add to that, Kimara, so with the governance, with the board of directors, right, they don't necessarily have to be shareholders. It's typically good if they are, but they don't necessarily have to be shareholders. And they can be a part of the percentage that the JSE will allocate for the micro market. But I just want to let you know that a board of directors, a proper board of directors, it can really transform your company, and it gives your company certain, depending on who you attract to your board of directors, it gives it a level of, it takes it to the next level, it takes it to the next level or status. So what I would say is start looking for persons who you would want to sit on your board, because it will take your company, it can take your company to the next level. And in terms of giving up some equity, I know it's hard, I understand, but you, within yourself, you have to evaluate what's important. Are you going to go alone, or are you going to go with others and reach even further? But when you're doing that, you want to be the majority shareholder, right? So do enough so you can keep the majority shares if that's your concern.
Thank you very much, Gabriel. All right, we're going to wrap up now, and I think we have had a very good session. So please join me in thanking our panelists, Mr. Gooden, Gabriel, and Rajiv, for their contributions. I hope it has provided some alternative forms of financing that you may be able to be thinking about, and you can use that in the context of what you knew before about traditional, developmental, and now, remember, debt, equity, quasi-equity. All right. And you can visit their booths for more information and questions that you may have. Thank you very much.
Thank you, Lisa, and thanks to all our panelists for really broadening our perspectives on the range of innovative financial solutions that we can tap into. So we're at the end of our program, but before, I have to put in my JAMPRO plug here. Before we close, I want to just highlight another important tool that we have at JAMPRO. Everybody got a QR code sheet? All right, on that sheet, there is something that says scan and complete exporter readiness checker. This exporter readiness checker has a financial readiness component, and it's really a self-assessment tool, especially for our aspiring exporters. We encourage you to just complete. This is a very short self-assessment tool, but it really helps you to identify the gaps and what you need to do to close those gaps. Once you complete this checker, a representative from JAMPRO will reach out to you and literally handhold you to guide you on how to address the gaps. So please scan the code, Complete the exporter readiness checker, and someone from JAMPRO will be in touch with you. So, as I said, we're at the end of our formal presentations, and I'm sure you'll all agree with me that the information presented, the discussions, the feedback have been very relevant, and I'm sure it will be useful as you continue to grow your business. So let me see, by a quick show of hands, how many of you have really thought that this session has enhanced your awareness or enhanced your knowledge of the range of financial tools that are out there to assist you. Show of hands? Okay, great. Let me, on behalf of JAMPRO, I just want to thank all our presenters and panelists for their contribution and the actionable insights that they have presented today. Please let us show our appreciation to all the speakers, all the panelists. I also wish to acknowledge and to thank our audiovisual support team from AV Concepts for navigating the various presentations and ensuring that all the technical arrangements for today's sessions were in place. Thank you, AV Concepts. Finally, I want to say a special thank you to the DBJ, the Development Bank of Jamaica, for partnering with us, as well as to say a big thank you to my hard-working JAMPRO team for organizing today's session. Thank you, Team JAMPRO. And of course, to you, our exporters and future exporters, thank you for joining us today and for your active engagement. This segment of our session is now officially closed, and we invite you now to network and to explore the financing resources available at the various information desks and to help yourself to some refreshments on your way out. Thanks again for your participation, and we wish you all the best in your export journey. Thank you.